Pass back. We're in the game now. Why isn't it starting? There we go. That was hopefully the stream's good. That was weird. That was a long delay. Usually it starts like the second I start stream. That was a really long delay. We're back though. We got a gym membership, so now we can start coming to the stream a little bit later and, you know, have a full stream of content rather than you know, running out of things to talk about. What's up, Gobnobber? What's up, P? What's up? How you guys doing? But yeah, so let's start it off with the earnings. You had AutoZone this morning. See how that did. Down 2%. Oh, Pal's live right now? Is he... Did this just start? Or has this been on for a while? That doesn't look like Jerome. That don't look like Jerome. It's probably nothing important anyway. What's up, Death? Humberto. Matt Romano. What's up, bro? Doing good, bro. Got my gym pass back, so we're back in the game, bro. We're back in the game. Pretty excited about that. Pretty excited about that. And you got Micron after hours. It's already up 2% going into the call. Oh, wow. Micron's up a lot past couple months, or the past month or so. Wow. That thing's crushing. Holy shit. Got that breakout, and it never looked back. Hasn't looked back since that breakout. That's crazy. I mean, you could even say it's a follow-up to this breakout. You got this breakout over here. And the retrace. And then boom. Beautiful. What's up, Moose? Yeah, that's an interesting one. Worthington? What the hell is that? I've never even heard of that. Worthington Enterprises. Metal fabrication, huh? It's basically at all-time highs. Metal fabrication, huh? That's interesting. Oh wait, that's the wrong. I wonder how that looks. 3 billion market cap. They went from like 250 million to 100 million to now 94. So it seems like their net income's kind of declining, but potentially stabilizing. Whoa, how is this a $3 billion company? Do they not have debt? Well, they have debt. That's weird. That's a weird company. I think I'm just going to throw it on the spreadsheet and research it one day. That's a weird one. Could potentially get undervalued in the future because it looks extremely overvalued. AAR Air Corp. That's at all-time highs. Aerospace and defense. Never heard of this. Air Corp. Yeah, looks like they might not. That's wild. That doesn't look good. Look, they were making a bunch of money, and then now it looks like they're about to go negative. That doesn't look good. I don't like the look of that one. MLKN, Miller Knoll. I haven't even heard of any of these. 1.3 billion market cap. What is this? Furnishing? Provides seating products, furniture systems, other freestanding furniture. Probably not interesting, I imagine. MLKN. Yeah, that's no good. And I don't really want to look at the rest. So nothing really there. What's up with the Jerome Powell speech? Oh, he is live. Or he's not. I don't know what's going on. Some of them he's live, some of them the other person's live.
Regulatory and geopolitical arenas. These policies are still emerging, and their longer-term implications will take some time to be seen. Recent data show that the pace of economic growth has moderated. The unemployment rate is low, but has edged up.
We've heard this all before, pal.
Job gains have slowed, and the downside risks to employment have risen.
We've heard it all before.
At the same time, inflation has risen recently and remains somewhat elevated. In recent months, it has become clear that the balance of risks has shifted, prompting us to move our policy stance closer to neutral at our FOMC meeting last week. GDP rose at a pace of about 1.5% in the first half of this year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. Activity in the housing sector remains weak, but business investment in equipment and intangibles has picked up from last year's pace, largely reflecting the AI build-out. As noted in the September Beige Book, which I bet you wonder what it is, the September Beige Book, that's a report that gathers qualitative information from across the Federal Reserve System. We'll talk about later. Businesses continue to say that uncertainty is weighing on their outlook. Measures of consumer and business sentiment declined sharply in the spring. They have since moved up, but remain low relative to the start of the year. In the labor market, there has been a marked slowdown in both the supply of and the demand for workers, an unusual and challenging development. In this less dynamic and somewhat softer labor market, the downside risks to employment have risen. The unemployment rate edged up to 4.3% in August, but has remained relatively stable at a low level over the past year. Payroll job gains slowed sharply over summer months as employers added an average of just 29,000.
You'll probably get a lot of whale updates here in like a month or so, judging by the price action.
Creation appears to be running below what we call the break-even rate, that is the rate needed to hold the unemployment rate constant.
Crypto's still the same.
But a number of other labor market indicators remain broadly stable. For example, the ratio of job openings to unemployment remains
Crypto's interesting right now.
And multiple measures of job openings have been moving
Everyone's like so bullish on
sideways,
crypto.
not down, as have initial claims for unemployment insurance.
I mean, you know how I feel about charts, but
Inflation,
the charts are
meanwhile, has eased significantly from
they don't look
its
the
highs
best.
of 2022, but remains somewhat elevated
they don't
relative
look the
to our
best.
2% longer run goal. The latest available data indicate that total PCE prices rose That's personal consumption expenditure prices. That's the
Let's see if we can
inflation
get
measure that
Seeking
we
Alpha
follow
article.
most closely. Rose 2.7% over the 12 months ending in August, up from 2.3% in August 2024. Excluding the volatile food and energy categories, core PCE prices rose 2.9% last month, also higher than a year ago. Goods prices, after falling last year, are driving the pickup inflation. Incoming data and surveys suggest that those price increases...
I don't want to listen to Powell, bro. Unless he's going to, like, do questions or something. I've heard it all before. I don't need to listen to Powell. I already know all this stuff. All right, so GameStop, profitable trading card business with net cash, masquerading as a meme stock. This is a article from September 9th that we didn't read. So could be, I mean, it's probably bad, but whatever. All right, to my surprise, GameStop continues to be overlooked by the broader market. Once known as a meme stock, GME has transformed its balance sheet, profit margins, and business model. I'm bullish on the future of its apparent transition to becoming a trading card store. The stock trades at a reasonable valuation, especially after accounting for the large net cash on the balance sheet. I reiterate my buy rating for the stock. What does he mean, trading card store? Just because they started selling trading cards doesn't mean they're a trading card store, but whatever. It's like, yeah, they're just gonna drop everything for trading cards. That's the plan. That's the plan. Alright, I last covered GME in July, where I upgraded the stock to a buy rating. The stock has traded sideways since then. GME no longer trades with the same volatility as in the past, but I expect the stock to gain as investors warm up to the new story. GME still derives most of its business from selling gaming hardware, but that's not the reason I'm here. GME has made an intentional push into trading cards. They've been selling trading cards for a while. The grading cards is the new aspect. Unlike physical video game retail, trading cards is an industry that I view to be standing the test of time. I'm a big collector of baseball cards and have been impressed with GME's moves into the space. GME started by allowing customers to buy and even sell their PSA graded cards in store. That's not accurate because they were selling cards in general like a year, possibly 2 years before that even happened. So if you're going to write an article, you should at least have your info correct. But GME started by allowing customers to buy and even sell their PSA graded cards in store, of course at a sizable discount to market prices. In contrast to local card stores, GME is also able to list cards for sale on its nationwide website. I actually watched a video, and I guess PSA's increasing their pricing for grading. Company then allowed customers to submit cards for grading and authentication by PSA. PSA is the most well-known and liked authentication service in the industry. I note that I have personally never submitted cards for grading myself due to the hassle. GME is tapping a real consumer pain point by allowing consumers to simply bring their cards to the store for help with submission. Latest development is called Power Pack. Oh, look. It's not the same Power Packs. This article's old. Latest developments called Power Packs. Perhaps the reader is familiar with the concept of packs, which contains cards, and boxes, which contain packs. Power Packs are an example of the mystery repack concept, in which cards are repackaged after being purchased individually. This is a rather lucrative and important business line for GME because, in my view, it would allow the company to efficiently offload any inventory that it could not sell at its stores via these Power Packs. Oh man, I wonder how he feels about digital Power Packs. Over time, I could also see the company eventually pushing harder into the Power Packs as the product takes off, perhaps viewing it as a preferred way to sell products over in store. The latest quarter saw the company show solid revenue and gross profit growth while making continued improvements on its cost structure. The company saw its GAAP operating profit come in at positive $66.4 million, up from negative $22 million in the year prior. Company saw strong growth in collectibles in both the quarter and year to date. Collectible revenue has jumped around 800 basis points to make up around a quarter of the overall business. I expect that percentage to increase rapidly in the years ahead as the company continues its pivot. GME ended the quarter with $8.7 billion of cash and $529 million of Bitcoin versus $4.2 billion of debt, representing a strong net cash balance sheet. Well, at least he actually, this article is older than the other one we read. At least this guy actually knows the info. GME also announced that it would be distributing a dividend of warrants to shareholders. Shareholders would receive 1 warrant for every 10 shares owned. These warrants would give holders the right to purchase stock at an exercise price of $32 per share, anytime up to the expiration date in October 2026. To my naive eyes, this looks like an interesting capital raising attempt. The stock recently traded hands at around 32x this year's earnings. I note that GME already generated 0.42 in GAAP EPS, and the typically lucrative fourth quarter is still ahead, suggesting that these estimates are reasonable, if not even conservative. I continue to target around $900 million in collectibles revenue this year. I value this segment at 12x sales, given the high growth rate and higher profit margin relative to the rest of the business. That suggests around $10.8 billion of value in this segment alone. Together with the $4.5 billion in net cash, we arrive at around $34 per share in value. For accounting for the rest of the business, I expect the main catalyst for upside to be the collectibles segment, making up more of the overall business along with continued margin expansion. It is possible the management continues purchasing Bitcoin and the price of cryptocurrency does not perform favorably. It is possible that the pivot to trading cards is not successful. That one's debatable. It is possible that competitors like Target try to offer competitive services, though I find that unlikely given their lack of focus on this particular business line. The stock does not yet trade at cheap valuations based on GAAP earnings, and is thus subject to volatility in the event of a market downturn. I can agree with that. Potentially. Debatable. These results look solid as they show both solid growth in the collectibles business as well as continued improvements in profitability. I expect margins to continue improving as the company moves further into the trading cards, which I view to be a high-quality business with secular growth. Company's strong balance sheet and GAAP profitability appear to be overlooked by the market as they afford the company time to make this pivot. GME fits many of the traits I look for in holdings of the best of breed growth stock portfolios. I reiterate my buy rating for the stock. Thanks. Appreciate it. Appreciate it, buddy. I like reading bearish articles more. I don't know. Maybe it's just me. I like it more when someone disagrees. Powell says slowing labor market prompted rate cuts, sees challenging situation ahead. Should we see if he's taking any questions yet? Mr. Powell, you taking any questions, my guy?
Case where risks to, as I mentioned in my remarks, risks to employment are to the downside and to inflation to the upside. Now, we only have one tool, which is monetary policy, really interest rates, and really it's calling for different answers. So for a long time, we have a document called the Statement on Longer Run Goals and Monetary Policy Strategy. We call it the consensus statement to save time.
Kind of quiet.
That says for a long time it said that consensus statement to save time. That says for a long time it said that when the two goals are in tension, we'll look at how far each one is from its goal and the time that it's expected to take to get back to that goal. And so we balance the two goals. So what we've done all year this year is we've had our policy rate has been tight because inflation has been above our target, but the labor market was very solid. Now, over the last really 4 months, really over the summer, the labor market has softened, payroll jobs have dropped a lot, so we can't really say that anymore. And I think what that told us is that stance of really having a tight focus on inflation really needs to moderate toward a more balanced approach. And so that's why we took the action we took at our last meeting. And as we go to our next meeting, to your question, we'll be asking ourselves, we'll be looking at the data very carefully, labor market data, growth data, inflation data, all of the vast quantities of data that we get, and asking ourselves, is our policy in the right place? And if not, we move it there.
Some may wonder about the frothiness of the markets, the markets reaching record heights and also record valuations. How does the Fed think about that in the equation?
Financial markets? So obviously we monitor financial markets very carefully. Our policy works through financial conditions. So that's credit spreads and interest rate levels and equity prices in the aggregate that can affect spending, for example. We look at all of that, but really our focus is on our two goals, and that is maximum employment and price stability. And when we see one of them weakening, we're going to respond appropriately with our tools. And in this case, that meant reducing the federal funds rate by 25 basis points. And we'll see what the future brings, but that's what we do. We look carefully at financial conditions, more from a perspective, though, of financial stability. So we see that the banks are well capitalized. Actually, in the aggregate, households are in good shape financially. I know people at the bottom end of the income spectrum are under pressure. No question about that, but it's not a time of elevated financial stability risks.
Mm-hmm. So the federal funds rate really governs consumer credit, but not so as it pertains to mortgage rates, correct?
That's right.
And let's talk about how the average consumer is going to see any difference in the intervening months relative to an easing of interest rates and the ability and maybe even more confidence to spend.
So we don't set mortgage rates, but when we change the federal funds rate, it will affect the mortgage rates and also all other consumer borrowing rates. Really, all interest rates that are on a floating basis will move a little bit or even a lot if they're short term, based on our moves. So the people will feel that over time. Also, it's not just these days. The market is pricing in the next 6 months what's going to happen to rates. So this is something that wasn't really the case 50 years ago. Now markets listen to us and follow, and they make an estimation of where they think rates are going, and so they'll price things in. And so longer term rates will move because of what the market participants expect us to do. So you'll begin to see, and you're already seeing changes in rates long before we make the decision. It can often be already priced in.
Is it fair to say that the Fed and the markets really have a higher tolerance for risk today, more so than perhaps before the pandemic?
I think if you look at some...
Yeah, let's hit this thumbnail real quick. I don't know if we even have enough chats for the thumbnail, so throw an emote in the chat.
Some prices, and we do monitor that, but we're not targeting any level of prices for particular financial assets. We don't have a view that we know what
there's not even enough chats for the thumbnail.
Financial asset is. We do look at overall financial conditions, and we ask ourselves whether our policies are affecting financial conditions in a way that is what we're trying to achieve.
We'll have to wait.
But you're right. It by many measures, for example, equity prices are fairly highly valued.
Let's segue to the topic of AI.
Weird stream today. Chat's
largely
chat's
AI
dead.
Stocks and periphery stocks, really driving the markets in many ways. Let's talk a little bit about the great unknown of AI, and if we think about various ages, our industrial ages, whether it be steam to electricity to the information age, and now to the age of AI, would you consider this to be the most disruptive force ever in modern American history?
I think it's way too early to say that. I wouldn't go that far. I would say clearly generative AI has all the earmarks of an emerging technology that could be very important in our economy and in our society. But it's very early to be making that kind of bold statement. So, what we're seeing is companies and institutions like the Fed, for that matter, are starting to experiment with how this new set of tools can be used in our operations. Mm-hmm. And it's very early days on that. And I think we have to wait and see. That's a good thing. I know many of the large financial institutions and other central banks, and we are asking ourselves, how can this help us do our jobs better? Mm-hmm. And I think it's going to be a period of experimentation over a period of years. And the history is always that there's a lot of fear that technological innovation will eliminate jobs.
What has tended to happen in history over time is that it just raises productivity and creates new jobs to replace the old jobs. And that happens. And sometimes it can take a long time, but ultimately that has been the pattern for the last couple of 100 years. Is this time going to be different? I just don't think we know yet. I don't think anybody knows.
Mm-hmm. You are a labor market futurist, also a historian, and the concept of AI and humans in the loop, very profound impact on the labor force. What are your thoughts about specifically agentic AI as a differentiator from generative AI, and how will the Fed be looking at the impacts of the workforce, the labor participation rate, given the unknown of what could happen with displacement around AI tools at all ends of the spectrum?
You know, our tools work on demand, basically. Lower interest rates, higher interest rates, they work on demand. When there are structural changes in the economy, there's not a lot that an interest rate change can do for that. And so if you're talking about distributional issues or labor force participation or retraining or any of the things that come to mind in connection with those questions, that's really going to be something for legislators and the private sector. We of course, we have many labor economists, and a good portion of them are studying what the potential effects of AI on the labor force. And many great economists around the country and around the world are publishing on that now. And you know, it really is too early to say. I think you can say that some jobs are going to be phased out, some jobs are going to evolve, and people are going to be further trained and that sort of thing, and be able to keep a job like that. And there'll be new jobs that come. And how will that balance work out, and what will be the timing of it? I think it's just quite hard to say.
But how does that factor into the deliberations on a near-term basis? Things are moving so quickly, and really the observation and the argument that artificial intelligence isn't just impacting those entry-level jobs and those, you know, quasi-unskilled jobs, but really tentacles reaching into highly skilled professions, whether it be finance, whether it be communications and media, whether it be healthcare, whether it be law, finance. So all ends of the spectrum, highly educated individuals down to more easily automated tasks. Sort of a really interesting problem for those of you that are studying labor market economics. How do you approach that?
Well, a lot of what we're doing with our time is trying to understand the current position of the economy, what's actually going on in the economy today. Pardon me. So part of that is hiring rate has really dropped.
I wonder if Powell smokes cigarettes.
Job creation has dropped very sharply.
He's always like,
Is that one of the factors there? So I mentioned earlier, I think.
He's like, I need a cigarette.
Part of it just is there's a lot of uncertainty about the direction
I don't think he
of public
does,
policy,
but I wonder if he does.
Companies are holding off. They're not hiring. And when you don't hire through attrition, your labor force shrinks and you save money that way. That may be a way of passing on tariff costs. It may be something like that. So that's happening. Lots of questions around whether AI is a major factor associated with the relatively low hiring rate for people just graduating from school and just entering the labor market. And you know, people are doing studies on that, and I looked at one from Stanford, another from the New York Fed in the last week, and the sense of it was, we think we can find some evidence that AI, generative AI, is having some, it's one of the reasons here, but we can't really say it's the main reason. Can't really say it's the main reason. And you know, we have our Jackson Hole conference every year in Jackson Hole, Wyoming, and we had some great labor economists, and one of the big debates was what's going on with AI, and there was a professor from, I want to say, Columbia, who just basically said, there's no evidence that this is acting any differently than her view was, not acting any differently from other technological, you know, movements, waves. And so I think she would be more at the end of an optimist, a techno-optimist. Mm-hmm. We've all, you know, there are books out there that will tell you the world is ending, and But I don't think we know. Again, I think we're going to see how this evolves. And again, if it does turn out to be something where labor force participation really declines in a way that it creates, social difficulties, that's going to be something that legislators and the private sector will have to address. We just don't know that yet, though.
Over the weekend, I read where you had been discussing, just picking up on what you said about Gen Z and college graduates and any possible disruptions in trying to find jobs. So Gen Z would be those born between 1997 and 2012, roughly ages 13 to 28. What are your thoughts on college enrollment? We'll talk a little bit about labor disruption in just a minute, and Jackson Hole, because I know that's a favorite of yours. But a lot of the individuals in this room today may have family members that fall squarely in that 13 to 28 category. What would you say about that?
I mean, again, we all see the data that it's just gotten tough for people just entering the labor force to be hired. But remember, the overall national aggregate hiring rate is at very, very low level. The layoff rate is also at a very, very low. You're in a low fire, low hire economy. And it feels like companies are they've kind of stopped hiring or slowed down their hiring because they want to see how this all shakes out. We're having very important changes to economic policy in the United States, and companies and people are wondering, how's that going to work out? So I think that's part of it. The other thing I would add, though, is, there's a lot of good scholarship around technological innovation and inequality, if you will. And the sense of it is really that if schools and society give students graduating the skills and aptitudes they need to benefit from evolving technology, you can have declining inequality over time. And that's what the United States had for many, many years, up until about 1970, when US educational attainment kind of plateaued and inequality takes off. So it's really down to having the skills. So kids who come out of school today with technology.
Yo, why is the chat so dead? Are you guys good, bro? Are you guys good? The chat is fucking dead today, bro.
Logical skills, and it's an educational issue.
Our society is our education system, and you spoke about inequality, particularly the digital divide, and thinking about where the United States really has paced among countries throughout the world. Particularly, that was a subject that you initiated at Jackson Hole back in August. What are your thoughts on how that is likely to really change the way we look at technology as a force for productivity and advancement?
I mean, technology has been raising incomes and productivity for really a couple hundred years since the Industrial Revolution. It's been an amazing thing for the quality of human life, and there's no reason why that has to change. In the United States was the first country to have gender-blind secondary education, and if you go back, you'll see that there's a great book on this, but it just basically the U.S. had fast technological innovation for a century, and also declining inequality because people were coming out and their educational the capabilities they took out of the educational system gave them the ability to benefit from evolving technology. So, and that's really the key, because technology, what it does is it makes us more productive. One summer I worked on a project that was building houses, and I basically had a shovel and I just dug most of the summer. And now that would be a Bobcat, which can do 100 times the work, no blisters, no water breaks. It's just much more productive. And you see housing production's gotten, at least it did get for a while, much more productive, not so much lately. But that I think is the story. And while U.S. educational attainment, college graduation rates and things like that leveled out, they're still going up. The rest of the world caught on and has really caught up in terms of educational attainment. And that really is the key. To your point, your educational system, your country is your educational system ultimately. It's the people that come out and what can they do, and a variety of other factors too, obviously. But I think that's that's a key element. I'm struck by this because this was a major factor at our recent conference, and we had a great conversation about it.
Well, tell us about the book. You gave me a homework assignment the other day, so I did.
Jerome wrote a book?
I think everyone should follow that lead.
All right. It's a book's called The Race Between Education and Technology. It's by Claudia Golden and Larry Katz, two Harvard economists, and it basically talks about the race between education and technology. So I recommend that to anybody. It was written in, I want to say, 2005, and they basically presented,
what was it called again?
Jackson Hole, they presented an update to the current day. The findings basically hold.
The other day, so
what was it called?
I did download it.
I wasn't listening.
I think everyone should follow that lead.
Claudia Golden and Larry Katz, two Harvard economists, and it basically talks. Claudia Golden. It's a book's called The Race Between Education and Technology. It's by
The Race Between Education and
their
Technology.
thesis, and I think it's they call it also skill bias technical change. So you need skills to benefit, but if you have those skills, then technology makes you more productive, and that's what we need. Incomes can only rise if productivity is increasing. We're sort of working as many hours as we can work now, so it really is down to how much output can you have in an hour, and that's productivity. So I would recommend that. I'm not getting any royalties for that, but by the way, Claudia Golden won the Nobel Prize for her work about 2 years ago. So I'm not the only one who thinks it was good work.
Chair Powell, let's move on to tariffs. This is an issue that confronts the business people here with us today. You addressed it very briefly in your opening remarks. You indicated that you believe that the costs of the tariff movement is in fact more transitory than embedded in supply chain. So I think we would appreciate hearing more about how the Fed thinks about evolving tariff policy.
So we're now collecting a good bit of revenue. The federal government collecting a good chunk of revenue, at a $300 or $400 billion a year pace.
In my Amazon.
And the question is, who's paying that? And the candidates for
peep
paying
it one day.
those tariffs would be
the
exporter, the foreign exporter.
It was a banana.
Someone
it was pretty
on
good.
our shores. It could be a company or a retailer. Someone is using the imported product to manufacture something, or the end consumer. And so so far, in its incredibly early days, it doesn't look like the overseas exporters are carrying the bulk of it. It looks like it's that middle group. It's retailers and it's importers, and they're not passing along to consumers that much of the cost. So the actual effects on inflation have been quite modest so far. It's really not. It's a small amount, but I mean, for example, I mentioned that core PCE inflation is 2.9%. Maybe 0.3 or 0.4 of that is tariffs. So it's not the big factor. It's not a big inflationary thing, but it is something that is driving up inflation a bit. And the question is, are companies then, are they going to eventually be able to pass that stuff through? And then that might drive inflation up a little higher. So we've been watching this since the beginning. Half our mandate is inflation, and I would say that the pass through to consumers has been later and less than we expected. How much of that will continue, I don't know. But the responsible thing from our standpoint was to watch and wait, because it's our job to make sure we don't make a mistake on inflation.
Well, that was my question. Do you imagine that is going to change, where the cost of tariffs will be more deeply embedded and passed on to the consumer? What do you foresee as?
So our forecast, and I think almost all the forecasts are for there to be a one-time pass-through, which will go through the end of this year, well into next year, and that by the end of next year, the one-time increase from the tariffs will be done, and you'll be back to the non-tariff related inflation, which should be much closer to our 2% goal. That's almost everyone's base case. It's actually our job to make sure that that's the outcome, though. So we can't be in a situation where we're just going to assume that. We can't leave that part of the goal unguarded. And so that's why we've been careful about cutting. We didn't want to cut too early. I mentioned in my remarks, if we cut too early, we may find out in a year that inflation actually wasn't under control and it's back up to 3.5% or 4%. No one thinks this is the base case, but that's the risk of cutting too early or too much. course, the risk of cutting too late, as I mentioned, is that we unnecessarily, the labor market weakens unnecessarily. There's no risk-free path, and it's a very difficult policy environment when your two goals are telling you two different things. You've got to make a compromise, and we really, again, haven't been in that situation for many, many years. It does happen, but it's happened now, and we'll manage our way through it. But we sort of have to look at both of them as equal. We can't just say we're going to do this one and not that one, unless this one is clearly a greater risk. And now they're coming into closer balance, I would say. We do see meaningful weakness in the labor market now. Very low job creation.
Bro, computer share sucks.
Still low, though, and
I'm still waiting on them to buy those other shares.
The labor market has reached a kind of
stock's gonna be at fucking $29 by the time they buy that shit.
Much lower demand and much lower supply for workers. It's a really unusual kind of a balance, if you want to call it that. But nonetheless, we think it's downside risk.
Well, if you could elaborate, what are some of the factors that are leading to depressed demand for labor?
So depressed demand for labor, based on surveys and talking to people who are doing hiring, a big chunk of it is that they're just unsure about what to do. Businesses, and I'd love to talk to people after this. Businesses don't want to do a lot of hiring. They may be postponing major CapEx, major initiatives, major acquisitions, and they'll replace workers who retire, but they're not looking to grow. This isn't every company and every part of every company in the world. It's just an effect kind of at the margin. That's got to be part of it. I think that's the demand side. The supply side, of course, has a lot to do with immigration policy. So
it's already been like 45 minutes.
Was at a very high level for 2 or 3 years before this year, and now immigration has really gone close to zero, and immigration is not really contributing to the labor force growth now, whereas it's been most of what the labor force growth was, and now so at the same time you've got declining demand, and also declining supply of workers, of new workers.
One of your passions is demystifying the Fed. You enjoy speaking about it, and those that are Fed watchers are wondering, will there in fact be 2 additional rate cuts before the end of the year? Of course, we're uncertain about that, if I understood your comments correctly. What does it mean to demystify the Fed, and what can each of us in this room do to be better Fed watchers for the benefit of our own businesses, if you will?
So not so many years ago, maybe 40 years ago, and for a long time before that, the main theory of central banking was to be mysterious and obscure. In fact, Montague Norman, who's a very famous former head of the Bank of England, but ending in the middle of World War II, famously said, never apologize, never explain. And he thought that monetary policy worked back, and everyone thought, it works best when no one understands. It's kind of mysterious. So starting maybe 40 years ago, a bunch of economists, including Alan Blinder and a number of others, said, you know what, that's wrong, because if markets and the public understand the way you'll react to incoming data, then they'll kind of do your job for you. And so they argued for greater transparency. And people said, you know what, that makes sense. So central banks started being transparent. The Fed didn't even issue a post-Federal Open Market Committee announcement until 1994, and then did so as an experiment just to see what would happen. Now, so if you fast forward through the 30 years since then, now we have a post-meeting statement, we have minutes, we have press conferences, every FOMC participant is on Squawk Box, we have a press release. So, and maybe some people say it's too much, it's excessive, but so that's the way it's evolved. So we try really hard to communicate with the interested public in a way that is useful and comprehensible and jargon-free. That's what we focus on, and that's all we're trying to do. So we don't use their, every profession has their jargon, and you kind of need it for internal conversations, but we try not to do that. So that's all we're trying to do. A couple of thoughts about what I wouldn't say I can't make anyone a better Fed watcher, I don't think, but things I would want to tell people about the Fed. One is just this, that we're making decisions, our decisions are made under elevated levels of uncertainty, even in normal times. The economy is fundamentally, no one has been able to predict the economy more than for the next few months. It's an unpredictable, it's this enormous entity, and it's just not that predictable. So we have to we take very much a risk management approach, and one of the risks we're managing is that we don't exactly understand what the current state of the economy is and where it's going to go. Range of plausible outcomes, like not what? Just one outcome.
What's up, Barley? How you doing, bro?
We're never saying that we know
the chat is
the
dead right now.
Do this, or we know it's going to
There's
do
people
that,
here, just nobody's chatting.
But
hopefully you're doing good.
Famous statement is, financial forecasters are a humble lot with much to be humble about. So that's one thing I would say. Another is that you should, I just have to say this, whenever we make decisions, we're never, ever thinking about political things. And so we're based in Washington, D.C., and many people, in Congress, and they're often things are seen through a lens of, is it good for this party or bad for this party or this politician? We're just not looking at things that way. We're looking at what's the best thing for the people that we serve in the medium term. What's the best policy? And many people don't believe us because they think, come on, you're really political. But the truth is, most of the people who are calling us political, it's just a cheap shot. And also, we don't engage. We don't, our argument is doing our jobs. We don't get into back and forth with external people. We just do our jobs. We keep our head down and do our jobs. That's what we do. So those are two things I would offer about the Fed.
We have run out of time. We have come to the end of our program. And I'm wondering if there's anything additional that you'd like to share with the members here today, and again, to help us be more prepared as we begin to look to 2026 and strategic plans for business and things on the horizon that would help to, of course, create more jobs and more prosperity.
So I'll say one more thing that struck me just now about the Fed, and that is, remember, we have a really important job. Maximum employment, price stability. We regulate and supervise the banks. We operate parts of the payment system. But those things are really about cyclical demand management and financial stability. The policies that really matter for the U.S. economy in the long run, things like investment, particularly investment in people, that's not something we can do. I think we get a disproportionate amount of attention compared to the things that really matter for the country, which are the things that Congress can do and the private sector can do, which are the things that will really matter for future generations, are not interest rate policy and the things that we do as important as we are. And beyond that, I'll just say this has been great, as always. I've enjoyed talking to so many people here today, and I love to get out and talk to people who are working in the real world in the economy. There's nothing better than that. Most of my career was in the financial sector, and I constantly was out talking to people rather than sitting in my office looking at aggregate data on the economy. So this is a much more comfortable place to be.
You are headed back to D.C. later this afternoon.
Yes.
What does the rest of your day look like?
Get home. I won't get home until after dinner, so it looks like me working on the plane on the way back. So anyway, thank you so much. It's been great. Thank you.
Exciting stuff. Exciting stuff. What did Powell do before he was the Fed? I think he's a lawyer, if I'm not mistaken. I think he was a government lawyer. I can't remember, though. I mean, this is from Wikipedia, but it says, American investment banker and lawyer who has been the 16th chair of Federal Reserve since 2018. Graduated from Princeton University and from Georgetown University Law Center. After working as an attorney for 5 years, he switched to investment banking in the mid-1980s. Worked for several financial institutions, including as a partner of Carlyle Group. So he's always been so I guess he's always been in the investment banking world. But yeah, he was a lawyer before all that. Nexstar, Sinclair won't air Jimmy Kimmel's return on ABC affiliates. Trump cancels meeting with top Democrats as government shutdown looms. Young adults embrace financial nihilism with risky crypto and stock bets as American dream feels elusive. Yeah, I could see that. Because everyone thinks they're going to get rich off of... Everyone thinks they're going to get rich like this, on the snap of a fucking finger. Nobody, for some reason. The old ways of investing is dead. Nobody wants to actually invest anymore. Eli Lilly to build $6.5 billion Texas manufacturing facility for obesity pill. What's up, Jared? How you doing, bro? Single-family rent growth is starting to show new weakness. What does that mean? Single-family rent prices in July increased 2.3% from the same month last year, to slower than the 3.1% average increase a year ago. Oh, okay. So it's still going up. Rent's still getting more expensive. Just a little bit slower. Altman Huang last-minute negotiations that sealed the $100 billion open AI NVIDIA deal. I don't want to read about this. Trump gripes he didn't get UN renovations contract in speech. See, Chicago Fed President Goolsbee says officials have to be careful not to get aggressive with rate cuts. Amazon to close all of its fresh grocery stores in the UK. Really? Amazon plans to close all its fresh supermarkets in the UK in the latest recalibration of its grocery strategy. Company said in Tuesday blog that it's preparing to close all 19 of its fresh UK stores, following a thorough evaluation of business operations and the very substantial growth opportunities in online delivery. 5 of the fresh locations are expected to be converted into Whole Foods stores, Amazon said. Amazon opened its first fresh location outside the US in London 2021. About after a year it debuted, the store concept in the Woodland Hills neighborhood of Los Angeles. Fresh stores offer cheaper prices and more mass market items compared to Whole Foods. Upscale supermarket chain Amazon acquired for $13.7 billion in 2017. Many of the stores also feature Amazon's cashierless just walk out technology. The fresh store pullback in the UK comes as Amazon has continued to adjust its grocery ambitions. The company has slowed expansion of its fresh grocery store chain and Go cashierless stores in the US. Still maintains 500 Whole Foods locations and has opened many Daily Shop Whole Foods stores in New York City. At the same time, Amazon CEO Andy Jassy and other company executives have touted the success of sales of everyday essentials within its online grocery business, which refers to items like canned goods, paper towels, dish soap, and snacks. Jassy told investors at the company's annual shareholder meeting in May that he remains bullish on grocery, calling a significant business for Amazon. The company on Tuesday also said it plans to offer same-day delivery of groceries, including perishable items in the UK beginning next year. Is that saying they think their only hope of making any meaningful use? It's just a title, bro. I don't know. What's up, Survive and Thrive? The one near me is already gone. Shoplifter Paradise. I see. Makes sense. Makes sense. Amazon faces off against FTC over deceptive Prime program. Morgan Stanley, close to offering crypto trading through E-Trade, calls it tip of the iceberg. If only you would bring back E-Trade Pro. If only I could use E-Trade Pro. I would actually care. Secret Service dismantles telecom threat around UN, capable of crippling cell service in New York City. NVIDIA and OpenAI's $100 billion deal sparks global chip stock rally. Not much. Not much news. Fold, tap, Stripe, and Visa and launch of first Bitcoin-only credit card? What? Oh, it's... Okay, I would never use this. Kind of cool, though. I think getting, like, cash back in Bitcoin's kind of an interesting concept. Especially for someone like me who has, like, no intention of buying any. But it's still somewhat interesting. It's just I wouldn't get one unless a major bank released it. I'm not gonna get some random bank's credit card or whatever the fuck Fold is. I ain't fucking with that. If like Chase releases one or something, you know, then I'll look into it. Alright, so nothing there. Streamer under fire for attacking elderly Japanese man claims he was defending himself. Wait, what? Live streamer in Japan assaults elderly Japanese man who asked him to stop filming. This is gonna be whack.
Hey, bud, it's okay.
Jeez, bro. Chill.
Hey, stop, bro. Don't touch me, bro. Stop, che. Dios.
This guy has no chill. That guy has no chill. Teacher arrested for viral poop spray prank that cost school $55,000. 32-year-old Alexander Paul Robinson Lewis repeatedly used the spray at Florence High School between August 25th and September 19th. Officials say the prank triggered medical issues for students, including respiratory problems, led to expensive inspections and repairs to the school's air conditioning. What the hell? Lewis was arrested on September 19th and charged with disturbing schools and malicious injury to property. He was held at the Florence County Detention Center while waiting a bond hearing, but was released after a judge announced his total bond was $9,000. So y'all found the gas leak, and if it would have done it once, it would have just been a harmless prank, but dude, use an entire can of fart spray in a week's too much. Okay. When yesterday walk out with a whole trolley full of legs of lamb, damn. Risk their lives stopping them and getting stabbed. Closing all the police stations. I think Coinbase gives like 3% back. They try to push savings account too. Seems they can give more interest than banks. I don't know about that. But I don't have Coinbase. I don't think I have a crypto account anymore. Pretty sure I deleted all of them. DoorDash driver uncovers hostage situation after delivering suspicious order. One-of-a-kind pre-release Raichu Pokemon card sells for over $500,000. Yeah, that's the card I had, except it's not pre-release. Twitch responds as viewbots rival Netflix viewership with millions of fake hours watched. A new report on viewbotting has revealed that Twitch has had 30 million hours of fake watch time from botted viewers, while Kick is at 20 million. However, the Amazon-owned platform is working on clamping down. Viewbotting isn't a new thing on the internet. Content creators have purposely used bots in the past to inflate their following and put eyes on their stuff. However, it has come under the spotlight again in recent weeks, especially on Twitch. I want YouTube to crack down on viewbotting. That would be nice. Our viewership is not in free fall, especially among the millions of community channels that are core to Twitch viewership. We've seen some misinformation swirling, and a lot of that misinformation includes data pulled from third-party sources. Those numbers are incorrect and they're not from Twitch. Wait, I've already read about this before. This is a new article? I've already read about this. I don't think this is new. Twitch has been working on additional viewbot detection tools. However, according to stream charts and Audience.ly, there's still been enough fake watch hours to match Netflix. According to their new figures, suspicious Twitch streams generated over 30 million fake watch hours, which is comparable to the weekly viewership of a top series on Netflix. Kick also clocked in 20 million fake watch hours too. As noted in late August, more than 41,000 Twitch channels with 50-plus average viewers were flagged with at least one suspicious stream of viewbotting. They reiterated that in their new white paper, claiming over 4,400 streamers showed persistent signs of viewbotting too. Twitch addressed stream charts findings, telling them we're talking openly about our viewbot detection work because we think it's an important conversation. As we have with prior updates, we'll continue to update our community on improvements we make to our detection tools. We agree that transparency in this area is really important. They also noted there isn't a short-term effort. We see this as a long-term effort, and we've been investing in the area for some time. We're focused on building solutions and improving our detection tools. These changes are something that Twitch has promised for a while, so it remains to be seen when they'll happen. MKBHD praises impressive iPhone Air, but has 2 deal breakers. Biggest complaints: battery life. iPhone Air is pretty weak. Charges slower. They're offering 4% APR, I think. I don't know about all banks, but I ain't get squat on my current account. 4%'s around where most high yield savings is. Anywhere from 3 to 4%, but it's going to lower as interest rates get lower. It's not going to be 4% forever. At least it shouldn't be. Unless it's just an incentive for people to move their money in there. But it'll go down eventually. They all will. Alright, after years of waiting, the LEGO Pokemon collaboration is finally upon us. And after a huge set was leaked, we finally know exactly what it'll contain. LEGO's no stranger to a good collaboration, whether it's upcoming set for Legend of Zelda, various vintage consoles, Mario, Sonic, Star Wars, or even Fortnite in the form of a brand new game. However, there's one well-known collab fans have been waiting for years, Pokemon. Luckily, it's finally on its way, and after being announced, various leaks began appearing, showcasing that one of the sets will be the 7th largest in LEGO history, with a rather impressive $650 price tag. Well, thanks to a leak, we finally know what that set will contain. As revealed in a leak on Reddit, the largest LEGO X Pokemon set, which boasts a whopping 6,830 pieces, will contain Bulbasaur, Squirtle, and Charmander. Naturally, these are the original 3 starter Pokemon you get to choose from at the beginning. So they're synonymous with the video games, outside of the fact that the set will contain Bulbasaur, Squirtle, and Charmander. We don't have any details as to what form this will take, whether they're 3 medium-sized individual structures merged into one or part of a larger landscape that features 3 different themed locations surrounding each Pokemon is yet to be seen. All we know is there is set to be the 7th biggest set in LEGO history at 6,838 pieces. Will cost $650 and will release to LEGO Insiders on February 27th, 2026. Outside of this, we know there will be 20 retail Pokemon sets to release in 2026, which will be split into 3 waves. The first will be late February, which will be the set above, and the last 2 will be in the summer. The first wave will be more aimed at adults, and the second will feature smart bricks, similar to the Mario set, allowing the Pokemon to battle. It's likely we'll hear more about the largest set soon, but we'll know who it'll focus on. View spoiler. View spoiler. Oh, I thought it was gonna be a better spoiler. I thought it was actually gonna show the set, not just an old picture. What is this? A Japanese spacecraft that once carried over 13,000 Hatsune Miku fan messages and drawings into space has officially ended its mission after 15 years. Japan's Aerospace Exploration Agency announced on September 18th that it has terminated operations of the Venus Climate Orbiter, also known as Akatsuki. Probe has been out of contact since April 2024 after an incident in its attitude control mode caused communication loss. Recovery efforts were attempted. With the spacecraft already far beyond its expected lifespan, JAXA has now closed the mission. Okay. Don't want to read much more. Nurse goes viral with over 5,000-mile job commute from Sweden to California. Palworld announces Cozy Games spinoff days after Pokemon's Cozy Game reveal. Palworld's getting a cozy farming sim spinoff called Pal Farm. Coinbase. Currently 10% if you allow them to lend out. Facebook launches AI dating assistant to help singles find their dream match. That sounds terrible. Meta's adding artificial intelligence to Facebook dating in an effort to make finding love online less exhausting and more precise without what it calls swipe fatigue. New tools include a dating assistant AI chatbot that helps users refine searches, boost their profiles, and even suggest date ideas. For example, you can type "find me a Brooklyn girl in tech," and the assistant will pull relevant matches. Meta says the chatbot will be part of the matches tab and is gradually rolling out in the US and Canada. What the hell? Alongside the chatbot, Facebook Dating is also introducing Meet Cute, a feature that automatically pairs you with a surprise match once a week using Meta's personalized algorithm. Company says it's ideal for anyone tired of swiping and will help users expand their dating pool in a fresh, easy way. Meta's exploring options to adjust the frequency in the future. Meta notes that hundreds of thousands of young adults in the US and Canada create Facebook dating profiles every month, and these AI upgrades are designed to help them meet more people without paying for premium perks. This is sure to be a big hit with users who are looking to find like-minded individuals to chat or play Smash Bros with. Move comes after competitor Tinder made headlines in 2023 for unveiling a controversial $500 monthly subscription with exclusive benefits, a stark contrast to Meta's pitch of accessible no-cost AI matchmaking. With its AI assistant and automatic weekly matches, Facebook Dating is betting that artificial intelligence can take some of the work and fatigue out of modern online dating. It's kind of interesting, I guess. That's my, I mean, I don't know. I don't trust anyone on the internet to begin with, but that is one of the huge barriers, is I'm not willing to sit on a fucking app and swipe all day. Ain't nobody got time for that. To just meet low quality women. So much, all that effort to meet such low quality people. Just, it's not for me. Not for me. Fortnite's new proximity chat modes, pure chaos as Epic bans thousands. Man in gorilla suit arrested for attacking stranger and stealing his shoes. Okay. Heavy soda? What the hell? Who's drinking heavy soda, bro? Midwestern specialty called heavy soda is taking over social media, sparking a debate among health-conscious users. Go to the soda fountain in a fast food joint, pick your bev of choice, only for it to be super watery and disappointing, forcing you to go with a different option you didn't really want to in the first. I've never had that issue because I don't drink soda, so I don't know what that's like. Midwest companies have found a way to avoid this with a concoction called heavy soda. No, it isn't a suicide beverage where you combine every soda together. Instead, it's simply pop with extra syrup for more flavor and extra sweetness. Especially common in middle America, where heavy sodas are labeled on drinking fountains or fountain drink machines, so customers with a sweet tooth can get exactly what they're looking for. Well, that sounds terrible. You ain't gonna catch me drinking no heavy soda, bro. Jimmy Kimmel returns to ABC. Oh yeah, what was this? Astrophysicist claims interstellar object 3I Atlas could have the power to create planets. This is a weird thing. Astronomers are buzzing after the discovery of 3I Atlas, a mysterious interstellar object hurling through our solar system, and a new theory suggests it could help create planets. Unlike asteroids bound to the sun's gravity, 3I Atlas entered from deep space and will eventually leave again. Its unusual brightness and rapid spin rate have fueled theories, with some insisting it could be an alien aircraft. Unlike typical comets that reflect sunlight, it appears to glow on its own, sparking speculation about an onboard power source. NASA was even asked by Rep. Anna Paulina Luna and Harvard astrophysicist Avi Loeb to monitor 3I Atlas when it swings past the sun on Halloween Eve, amid fears it could deploy mini-probes towards Earth. NASA has denied any evasion threat, but another astrophysicist believes these objects could play a different cosmic role. At Europlanet Science Congress, Professor Susan Falzner presented research suggesting interstellar objects might act as planet seeds when captured in the dusty, gas-rich disks around young stars. Interstellar space would deliver ready-made seeds for the formation of the next generation of planets. Planet formation normally happens through accretion, small particles sticking together over millions of years, but boulder-sized collisions tend to bounce or break apart instead of merge, raising questions about how massive planets like Jupiter form quickly enough. Falzner's model shows the captured interstellar bodies could skip this barrier by providing a large, stable core from material to build upon. The idea could solve another puzzle: why giant gas planets are most commonly around massive stars. Their protoplanetary disks only last a couple of million years, usually too short a window for giants to form. Interstellar seeds might speed up the process, offering a fast track to building Jupiter-sized worlds. Interstellar objects may be able to jumpstart planet formation, in particular around higher mass stars. Higher mass stars are more efficient in capturing interstellar objects in their disks. Therefore, interstellar objects seeded planet formation should be more efficient around these stars, providing a fast way to form giant planets, and their fast formation is exactly what we've observed. Still, it's only a theory. NASA maintains that 3I Atlas is simply a comet, not an alien mothership, but as the object makes its closest pass this fall, it continues to spark both scientific debate and sci-fi speculation. Meanwhile, NASA is chasing another mystery closer to home. The agency revealed this month that samples collected by its Perseverance rover on Mars contains leopard-spotted rocks that may hold biosignatures, potential traces of ancient life. Acting Administrator Sean Duffy called the discovery the clearest sign of life we've ever found on Mars. That's cool. That's cool. Anything else? 70-year-old woman awarded tickets to see Nine Inch Nails. Manchester United fan attempting viral haircut challenge assaulted in Chelsea clash. What? The video, a man can be seen approaching the United Strand in crowd before grabbing him by the hair, yanking his head downwards. Two were separated by those nearby, but the aggressor returned moments later to shout, "I'll do whatever I want." What? Manchester United supporter who went viral for refusing to cut his hair until the team wins 5 matches in a row was assaulted during United's clash with Chelsea on September 20th. Fan known as United Strand has documented his year-long challenge across Instagram, where he's attracted thousands of followers watching his hair grow as the streak continues. He began the bet in October 2024, and despite United's up and downs, the longest run of wins so far has only been 2. However, his latest viral video was an update regarding his hair growth. A clip of the United Strand being attacked by another United fan has circulated social media, with 2 being pulled apart before... I want to see that video. Oh, it's on Instagram. I probably won't be able to watch it. Well, that's lame. I wanted to watch it. A lot of news. Carnival Cruise Line unveils sunscreen flavored ice cream. What? Critics say it tastes good. What? What? Sunscreen flavored ice cream? There ain't no way. There ain't no way. I don't believe it. I don't believe it for a second. Yo, why is the chat so dead? Are you guys like okay? This is the most dead the chat's been in a while. Costco seems to no longer sell Xbox games or consoles. All tired? I guess so. Something. Guess everyone's busy. Seen Jake Paul's latest opponent. I watched the Prince conference. Nah, it's not even a fair fight. It's like Jake Paul's like a 200+ pound dude trying to fight like a 150 pound guy. It's not even fair. Just another fake fight. Wait, what? Kojima is working with Pokemon Go creators on an AR project. A New Dawn. Music. Music! Move beyond the screen. Longtime developer is exhausted with potential of traditional games. Kojima Productions will work with Niantic on bringing new forms of storytelling to the real world with geospatial AI tech. Notably, this is Niantic Spatial, the tech spin-off that wasn't sold to Saudi Arabia along with Pokemon Go. I guess connecting wasn't a mistake after all. I don't know. I don't understand. This little trailer here doesn't give you very much information. Vicent, which definitely isn't the Metal Gear Solid 6 we never got, teases its cast. Kojima's new horror game, OD, is real and has a terrifying first trailer. It probably has music, so I probably can't even... So far, no music, so we're good. Clean, son. You lit that match. You light that match, boy. Actually looks kind of sketch. This could be a good game. What's going on with their skin, bro? Music! Her skin wasn't like that on the first frame of that clip, huh? That's creepy. That was a creepy trailer. Bought a pair of the Meta glasses. They'll be here on Tuesday. Oh, nice. You'll have to let us know how you like them. Yeah, that was a game. It's a new game by Kojima. Department of Homeland Security uses Pokemon song to promote kidnapping. What? I mean, I probably can't listen to this, but... No. It's an ice commercial. It's a fucking ice commercial, bro. It's an ice commercial. No way, dude. It's a fucking ice commercial, dude. There's no way. There's no way this is real. It's a fucking ice commercial, dude. That's insane. That's the craziest shit I've ever seen, potentially. The fucking... No fucking way that's real, bro. Holy shit. There's no way that's real. Bro. It's a fucking ice commercial. That's insane, bro. Gotta catch 'em all. I feel kind of bad laughing at this, but holy shit, that's funny, dude. It's a fucking ice commercial. Gotta catch 'em all. No. No way, bro. That's crazy. Super Smash Bros. On N64 had a very funny anti-piracy trick. Anti-piracy measure here was delayed action, allowing the player to boot the game an enormous 68 times before anything would happen. Then on the 69th time of playing, you'd suddenly find yourself locked in it to only being able to play as Mario. Funnily enough, Nintendo's devilish trick here gets close to one of the very few actually effective anti-piracy measures to have been used. When a game lets you play it for so long before popping up a message saying, hey, you pirated this. We hope you enjoyed it so far, and if you want to carry on, buy a copy here. Treating pirates as potential customers has proven lucrative for many indie projects over the year. While draconian systems based on hardware locks, disk requirements, and game slowing software used by AAA publishers will only ever punish legitimate purchasers, with all such restrictions inevitably removed from the pirated versions. Yes, Nintendo picked 69 for comedy reasons, I still like to believe. That's crazy. Borderlands 4's super jump glitch is wild and won't be fixed. Death Stranding anime now has a title and its first trailer. Meta to launch a national super PAC against AI regulation. RoKids smart glasses. WhatsApp starts rolling out message translation on iOS and Android. The EU wants Apple, Google, and Microsoft to clamp down on online scams. PlayStation State of Play set for September 24th. Oh, that'll be dope. We'll check that out if it's on stream or if it's live during stream. Meta is making Llama AI models available to more governments in Europe and Asia. U.S. and China agree on a TikTok deal. Yeah, I won't read that. Or wait, is that new today? I thought I saw that yesterday. I'll be right back real quick. Let's see. White House press secretary is expected to be signed in the coming TikTok deals expected to be signed in the coming days. TikTok will be majority owned by Americans in the United States. Now the deal just needs to be signed. President's team is working with their Chinese counterparts to do that. Okay. Okay. SpaceX's lunar lander could be years late for a planned 2027 mission to the moon. Gemini arrives on Google TV. Disney's Mandalorian and Grogu trailer. Rip. See, we even start the stream late and we run out of news. But for the few people that are here, I would expect later streams going forward. It's either I do later streams, like starting at like 10 or 11, or I come stream in the morning and then leave and, you know, go to the gym like in the afternoonish. I don't know what you guys would prefer. I mean, it seems like people like the early streams more. I feel like there's more people here when we start early, so maybe it'll be better to do early streams and then just leave. But I don't know. Like I was saying yesterday, it's just easier to get up and go. But if the stream's just gonna be dead when I come here, I don't know. What's the point of that? Might as well just get it done and over with if that's the case. Have I been back to the gym? Yeah, I went today. It was a good time. Ripped like 30 minutes on the stair climber and like 20 minutes in the sauna. Watched a little bit of Star Wars. I don't know which one. I think it's I don't know which one it is. It was a good time. I missed the gym, honestly. Need the gym in my life. But we'll figure out what we're gonna do with the stream. I'm just surprised how dead it is today. It's like, I don't know. It just and also like when we've been the past like month or so, you know, I've been streaming a lot. I've noticed around this time the stream like really starts to slow down. So it might be better just to bang it out in the morning than try to, you know, go in the morning and then come here later when nobody's here. I don't know. We'll figure it out. We'll figure it out. Gym in the building I'm moving to and an outdoor one in the park across the road. So I have no more excuses to start tell me you feel good after it. Tell me it. I just like going. I just like having something to do. You gotta go for more than a day to see the results. You can't just go once and think a bunch of things are gonna change. You gotta at least be going for, I would say, a month. If you're going consistently, like a couple times a week minimum for a month, I think you'll see the results. You know, obviously the more you go, the more results you'll see, but you're not going to see results after going once. And you might not even feel good after the first time, like, if I'm being honest. You might feel like dog shit, like, because you've never really, I don't know, you know, I'm just speaking through how I felt when I first got into it. Like, I could barely do cardio. Lifting was hard. And I didn't necessarily feel good after. But after, you know, time, months, weeks, whatever, then you start to see the benefits. I think that's the biggest issue with the gym, is there's no immediate results. If anything, you feel terrible. Like, that's why probably most people quit, because they don't see the results. And, you know, results don't come until later. Results don't show up till you put in the work. What's up, Jeff Jolly? Wasn't there some dude in here like a month or so ago flexing about Open Door? Kind of weird. It's kind of weird how people act when their little stock play goes up. Like, oh my god, The little stock play they got off CNBC. I'll go through news one more time, but I don't think there's any. I don't think there's any news. Multiple people have talked about Open Door ever since that stupid article. It was kind of a joke. But there was one guy that came in here that was like completely flexing because it was up. It's just kind of funny. It's kind of funny how people act when they see a little bit of green for once in their life. Energy still up. Technology and consumer discretionary's down. Wait, what? I thought tech was up today. It must just be chips. I don't know, Nvidia's down. Ooh! That was some good stuff right there. That was some good stuff right there, bro. Yeah, it's just energy that's up today. What is Arch Rock? A-Rock? A-Rock? I never look at the insider buying anymore, but 4.4 billion. Damn. That thing looks like it's interesting. Oh, it's energy. Makes sense. Makes sense. A lot of energy plays on insider buying lately, and a lot of the energy plays are absolutely crushing. Stream probably will go mad the day of the warrants. Yeah, but it doesn't matter if nobody stays around. Like I was saying yesterday, I don't know if you were here, but views don't matter. People coming to the stream doesn't matter. People actually staying here and bringing value to the stream, that's what matters. But yeah, I don't know. I'm not too worried about it. Getting views is pretty much meaningless if nobody's willing to stick around and follow. They're not going to let us read another Seeking Alpha. Nope. Only one a day. Kind of whack. Ah, the whole market's down. I see. I see. I think the Russell's still at all-time highs, though. Yeah, no news. That David dude got his tour canceled, but obviously can't. Yeah, that's a Disney Plus is getting another price increase. NPC Miles Morales crashes car after falling asleep driving home from Mafiathon 3. Wait, what? That's wild. Google Photos controversial editing is rolling out to Android users. Secret Service seized a network capable of shutting down New York City's cell service. Apple's expanding tap to pay on iPhone across more of Europe. Praise canceled sequel. Pal speaking? He was already live. You sure? Are you trolling?
Wiser eyes, I look back and I realize.
So you're trolling. So now I can never trust anything you say in my chat ever again? Appreciate that. Appreciate that. Why did Bethesda cancel Prey 2? Prey remains one of the most underrated shooters of all time. Though successful, it just fell short of sending the shockwaves to the FPS world that it should have. Prey 2 was a full game. Crazy fun one. The team was small, but you wouldn't have known it. I thought he was talking now. That was like an hour ago. Yeah, about an hour ago. If he is live, maybe I clicked on the wrong stream, but I don't think he's live. What is painkiller? Painkiller? Ah, music. Looks like Doom. Yeah, it literally just looks like Doom. Painkiller, huh? October 21st, 2025. That looks interesting. I thought that was new Doom. Nah, it's Painkiller, I guess. Got in from work. Time's a little different in the UK. Yeah, I don't think he's live. He was already live.
We may find out in a year that inflation actually wasn't
unless that's him, but they already did this. I don't know. I already watched that, so I don't know why they have it live again. Unless he came out again.
We're so
But I'm pretty sure that was already... Pretty sure that was the same live stream we watched earlier. It's just for some reason...
Got to make a compromise.
Some reason they're replaying it. I don't really know why.
And we really, again, haven't been in that situation for many, many years. It does happen, but it's happened now. And we'll manage our way through it, but we sort of have to look at both of them as equal.
Yeah, I already watched this. I don't know why they're restreaming it. It's kind of weird. It's kind of weird. Do you play something? I'm so lost, everything's boring, don't have anything to play. No, I don't play video games. I don't play video games. Yeah, I'm pretty sure that's the same stream they played earlier. Do play poker once in a while, but online poker's ass. I mean, poker's not that fun. I don't find poker fun. I don't really find gambling fun in general. But yeah, I don't play games, bro. Like, the stream is the highlight. Honestly, like, coming here and going live is the highlight of my day, really. Reading news, seeing what's new in the world. Like, that's probably boring as hell, but that's just what I like doing. I don't really enjoy playing video games. Although, if you want a game, like, interesting to check out, there's Balatro. Balatro's kind of an interesting game. Just judging because you like poker. You could like that game. I've played it a little bit. I don't know. I bet the new Borderlands is fun. I would imagine. Silk Song's probably fun. Hollow Knight. That just came out. Balatro's not $75. What are you talking about? Balatro's like a $10 game. You're tripping, bro. Oh, Borderlands. You get entertainment out of it. I've tried Balatro. I think Balatro's fun. If you have friends to play with, try Split Fiction. Or if you have a friend to play with, Split Fiction could be a good game. Trying to think what else. Yeah, I don't know. I'm probably the worst person to ask about video games, even though I'm relatively, like, up to date with all the new things coming out, and I just don't play. Like, the only reason I ever started researching video games is because of GameStop. Like, me a year and a half ago, I wouldn't know a thing about video games. I just don't play. Rambo First Book on the Commodore 64 was the last game I played. Never heard of it. The Commodore? What the hell's the Commodore? Do you mean the Nintendo 64? I've never heard of the Commodore. The fuck is that? This is an actual thing? also known as the C64, is an 8-bit home computer introduced in January 1982 by Commodore International. It's been listed in the Guinness World Records as the best-selling desktop computer model of all time. Independent estimates placing the number sold between 12.5 and 17 million units. Volume production started in early 1982, marketing in August for $595, preceded by the VIC-20 and the Commodore PET. The C64 took its name from its 64 kilobytes of RAM. I've never even heard of that thing. That's crazy. The Commodore. I thought you were talking about the N64. I didn't know this was an actual thing. That's a blast from the past right there, bro. That is a blast from the past. You had to load games on a tape cassette? That's fucking wild, bro. I've never even heard of that until now. Show my age. Facts though. Oh man. That new Dying Light the Beast, that looks like it could be a good game. Obviously, Resident Evil Requiem when it comes out. That should be good. Yeah, I don't think it's out yet, is it? I don't even know if they have a release date for it. February 27th, 2026. Okay. That should be a good game whenever it comes out. If you've never played Metal Gear, the new remastered Metal Gear that just came out, that's a fun game. There's quite a few good games. I just don't play them. Just when I play video games, I'll play it for like a while. Sometimes I'll get obsessed. Sometimes I'll get actually obsessed and I'll play a fuck ton. And then I literally won't play ever again. Like, that's just how it goes. Like, every time I play video games, I'll either get obsessed or I'll play it for like a day or two, and then I'll never play again. So that's why I don't play, because it's just like, it's kind of a waste for me. I had a Spectrum 48 before the Commodore. Did you ever hear of that? Definitely not. I don't know what that is. I'm about to find out, though. I'm about to find out what the Spectrum 48 is. ZX Spectrum. Oh, it's basically the same thing. Yeah, I've never heard of that. Never heard of either of those until today. I'm learning. I'm learning. That's why I like the stream, though, because it's fun to learn random things. You can play all the old classic games online now. I don't even know what games, like, what games are even on that thing. You're young, Corey. This is not your problem. I mean, I'm kind of young. I just my first game system was Super Nintendo, so I don't really know what came before that besides like the NES and whatever else. Like I don't even know, Sega. Like I don't know all the game systems that have came out throughout time up until, Super Nintendo, I guess. Can't believe 10.3 is literally next week. Yeah, it kind of sucks. Kind of sucks. I hope it drops more. But it doesn't seem like, I don't know. It just really doesn't seem like it's going to dip that crazy. I hope it does, but it just doesn't seem like it's going to happen. There's too much, there's too much demand for lower prices. All the people who thought they were going to time this, and I just don't know. I don't know. It's crazy. It's crazy seeing it so bullish. Wish you all the best. Gonna work night shift 22 to 11. Let's go. Let's go, Marius. Good luck, bro. Let's go. Stack that paper, bro. Stack it up. Stack it up. Stack it up. For Spectrum, there was Atari. I've heard of Atari. The Dreamcast. I've heard of that. Thank you for the stream. Oh, thank you for being here, bro. Thank you for supporting the stream. Appreciate you, bro. These units change hands for a fortune now. Sega Mega Drive. Heard of Sega, but never Mega Drive. That doesn't sound familiar. I know we don't do other stocks, but interesting that Beyond Overstock and BUI is doing a warrant dividend as well. Not falling for it, but interesting either way. I mean, I don't find that interesting because those companies are garbage. GameStop's actually good, so I don't really find that interesting. Those companies are only doing that because they have to stay alive, potentially. I don't think any of those companies, well, especially Beyond's dog shit. But I don't think any of those companies are good. What's Overstock? Is it OSTK? Overstock's not even, what are you even talking about? Overstock's not even public anymore, I don't think. Oh, Bed Bath & Beyond and Overstock merged. I forgot about that. Yeah, I don't think these are any good. Yeah. That's dog shit. That's trash. Yeah, they're losing less. Potentially. But yeah, no. That's not I don't find that interesting. Those companies are not good at all. Flagship game was Sonic. Remember those exhilarating games of Pong? Hey, Pong's epic, bro. Pong is epic. And where did you see that they're doing a warrant dividend? Because I don't think I saw that on there. Did you see it on Reddit and Twitter? Or is it like an actual filing thing? Because I don't think I saw that. Oh, it's right here. Maybe. Yeah, it's right here. Okay. I see. The warrants will have an exercise price of $15. Yeah, right. That shit's not going to fucking $15. Unless they really turn it around. Was that $1 billion market cap? I don't see that happening. I don't see that happening. But maybe if they become profitable, they can. But that's not happening. They're not going to 15. No way. No way. What's the #1 red flag when reading a balance sheet? It's not a very good question. I don't think, because a shitty company can still produce results. So I think you have to come up with that for yourself. Because just because a company's garbage doesn't mean the stock can't go up. So I don't think that's a good question. I think you gotta learn that for yourself. I don't think there's a #1 red flag. I think it's a combination of things. But a company that's losing a bunch of money and on the path towards bankruptcy, and they keep raising money, I would say that's a pretty big red flag. Because the only reason that company's raising money is because it's the only way they'll survive. And I would say their turnarounds aren't likely in most cases. But that's not really, that's not a #1 red flag. That's a combination of three different things: losing money, on a path towards bankruptcy, and raising money. Diluting shareholders, whatever it may be. Like that's three things that combine into one thing, I guess. So I don't think there is a #1 red flag, because every company is different. Every situation's different. There's no, there's a lot of scenarios that are similar, but I would say every business is pretty unique. So I don't think there's a #1 thing. They're all going to have their challenges and whatever it may be. And then, even on a good company, maybe it's overvalued. Who knows? Who knows? Chromatic Mod Retro is a pretty cool handheld device. They're coming out with a N64 one, I guess. So that's cool. But yeah, Mod Retro is dope. It's cool if you have the games for it, I would assume. I don't think I don't think games come on it. I think you have to buy the games. N64, that's sick. Yeah, I forget what it's called. I want to say it's the M64. Yeah, the M64. It's not out yet. You can get like a early bird pricing if you go on their website. I didn't know they sold games on here. That's kind of cool. I didn't know Mod Retro made games. I thought you had to get the Nintendo games. Pretty fun games that they have on there. Yeah, they look cool. I thought you had to play Nintendo games. I didn't know Mod Retro made games. But yeah, the M64 will be dope when it comes out. I don't think I would get one, you know. But it is a cool little idea. You know, maybe there's a certain person or type of person out there who doesn't want to use their current N64 system because it's kind of like a collector. You know, you could get that and use that instead. Or I don't know. I don't really know like what the target audience is for something like that. Even the Mod Retro. Like I don't really understand the target audience. But it's not my product, so I guess I don't need to know. I'd be curious though. I'd be curious to see who they like think their target audience is. You're getting a lot of volatility like through. This is crazy. I want to see the volume profile. You got a lot of volatility today. On GameStop at least. You know, the market as a whole is kind of down, but a lot of volatility on GameStop. Pretty decent sized swings. Nothing like crazy, but recently dusted off my NES and played a little Tetris. Tetris is dope. I like the Tetris on N64. That one's sick. Oh yeah, I forgot I did that. Okay. Yeah, 26.9 is going to be kind of an important level to watch. It's not really like a low volume area, but it's been consistently kind of skipping that price. And it's somewhat of a resistance in the more after hours. But you're still rejecting like the low volume area at like 26.6. It's kind of interesting. I wonder if you're going to fill that at all. Or even fill some of the lower low volume areas. Pretty interesting at this point because it's extremely bullish, but you're leaving a lot of gaps to the downside. So how long is this rally going to really last? I don't know. It could last. You're still holding above the resistant trend lines. Kind of just chilling there. Very interesting price action. Still looks great though. Super Nintendo for Christmas one year, and she came downstairs and said she didn't want one as she found one under my mother's bed. She was snooping. Straight snooping, bro. Like I don't want one anymore. That's the year she got coal for Christmas. She got a lump of coal. I'm about ready to make some avocado toast, my dude. Some avocado toast. Approaching power hour. Pepper on it. Sometimes I'll put pepper on it. I don't really. Just depends. It's usually just avocado, eggs, and cheese. Well, toast, of course. Hmm. See how had another short kind of blow up, but I think it slowed down. I don't know if it's still going. Yeah, I mean, it's still kind of going, but not crazy. Shorts are weird. It's crazy how, like, just randomly, like this one, just blows the fuck up for like a day, and then it just dies. It's just so weird. Especially because the retention on it is super high, so like, 80%. Of course it's going off engaged viewers, but that means 80% of 3,000 people watched that whole short. Like, you would think they would keep showing it to people. People are willing to watch it. Shorts are weird. They don't really make sense. They're so random. Like, there's gonna be a day randomly where one of those shorts just blows the fuck up and it starts getting tens of thousands of views. I don't know when it's gonna be or if it's even gonna happen, but it's gonna happen at some point, most likely. It's just how shorts work. They just randomly. Sometimes they just randomly start ramping up. They're very weird. Very weird. The VIX is up quite a bit. What does that look like? I don't get how we do like 6-hour streams. It's wild. Ooh, FPay? That was an interesting like value pick back in the day. What's that doing? It's in the shitter. So must not been that great of a value pick. Only 17 million market cap? What the hell? Why was I ever looking at this? Must have been in the early stages of fundamental analysis. Because I would never be interested in something like this. It's too small of a company. Yeah, there's just nothing, man. Crypto's still getting clapped. Jeez. Approaching support. But if that breaks, that's crazy. Not the best chart. This is not the best chart for this. Kind of just retracing the breakout, though. You're just not getting much buying on it. It'll be interesting. Who knows what's going to happen with crypto. It's looking very peculiar as far as a chart goes. You're kind of in this little thing. Your little triangle here. You'll probably want to see that hold if you're bullish. Will it break it? Who knows? That's very debatable. Is that what they call a falling wedge? That was called, I drew some lines on a chart and we'll see what happens. Like, I don't know. I don't know what they call that. I just draw the lines. I don't make the names up. I just draw them. One man's ascending triangles, another's descending. So, yeah. I mean, they all have their own, like, terms and technical reasons for why they are what they are, but at the end of the day, it's a fucking line on a chart. Like, it doesn't mean anything. Especially if you're not trading off of it. If you're not gonna make money from it, then it's I don't know. I don't know. Ryan Ruth found guilty in Trump golf course assassination attempt. Ryan Ruth? Forgot about that. Took a while for them to charge that guy. Or commit him, I guess. I like Pal, he's growing on me. Pal's chill. You just can't take what he says seriously. Like, you just can't be like everyone else and think everything he says has any, like, I don't know. The Fed, cutting rates, it's all macroeconomic things. So if you think it's, like, benefits you or not even benefits, like, if you think it's negative for you, it's probably not. Like, and even if it is, it's probably going to take months for it to even take place or to actually see the effects. So, I don't know. As long as you don't have your emotions tied up in whatever the Fed's doing, like a lot of people, it's pretty easy to see where the economy's going if you just listen. And really, like, the only way to trade rates is through, well, there's probably other way to trade rates, but one of the best ways to trade rates is TLT, and not a single person trades off of this, you know. Anyone who says they're making a trade off of the Fed and they're not trading fucking bond yields or any interest thing, they probably don't know what they're talking about, I'll be honest. Because, you know, you would expect Fed cuts rates, interest rates should come down. That means TLT goes up. But, you know, bonds get more expensive as yields go down. So, there's really only, like, one actual real play off of the Fed anyway. So there's really no point in even, like, taking too much weight on anything the Fed's doing. Of course it's important, you know, it's important to follow, but it's all macroeconomic shit that you're not, like I said, you're not going to see the effects of it until, like, a couple months, few months, maybe even years, like, who knows? It's all correlated, but it's not directly correlated. There's actually a famous trade, I don't know what year it is, but it's an old trade where a bunch of people thought bond yields were going to go down or up. I can't remember. But there's some massive, like, bond trade where the Fed started cutting rates and a bunch of people shorted the bonds, or I can't remember. I don't remember the exact trade, but a bunch of people did what they were supposed to, you know? Fed starts cutting, you buy up the bonds, bond prices should go up. and it didn't happen. I think they shorted. I think the Fed was increasing rates, and they shorted the bond yields, or the bonds, but the bond yields kept going down while the Fed was increasing rates. So a bunch of people got absolutely wrecked on this bond trade. I can't remember the exact details, but, you know, that's just a point of they are correlated, but not directly correlated. It can take a lot of time for things to actually play out how it's supposed to. But pals chill. Pals only chill if you actually listen. What's up, Muma? Where you been at, bro? Where you been? Hope everything's good. FTX trust files 1.15 billion lawsuit against Bitcoin miner Genesis Digital, marking one of the largest clawback actions yet in an ongoing effort to recover assets lost in the collapse of the FTX exchange. Complaint alleges that Genesis Digital and its co-founders received more than $1 billion in fraudulent transfers from Sam Bankman-Fried's Alameda Research between 2021 and 22. The investments, the trust argues, were made at outrageously inflated prices and provided little to no value to FTX's business, which was already insolvent at the time. Between August 21 and April 22, Sam Bankman-Fried caused Alameda to purchase several tranches of shares in GDA, a Bitcoin mining firm, at outrageously inflated prices. Filing read, while FTX Group funds were used to purchase the shares, only Alameda, and in turn Bankman-Fried, Alameda's 90% owner, was to receive any benefit to the great detriment of customers and other creditors on FTX.com. Under the U.S. bankruptcy law, the trust is empowered to pursue avoidance actions, lawsuit designed to claw back funds that were improperly transferred before a company filed for bankruptcy. The size of this suit underscores the scale of FTX's asset recovery campaign, which has become one of the largest and most complex in U.S. bankruptcy history, following the exchange's 2022 collapse. According to the filing, most of the funds came from customers' deposits on FTX.com that were funneled into Alameda Research and then redirected into Genesis Digital. Trust claims of the mining company's co-founders, Rashid Makat and Marco Crone, personally benefited, selling more than $550 million worth of their own shares to Alameda in the process. The lawsuit describes Genesis Digital as a politically connected miner in Kazakhstan that took advantage of cheap energy and favorable treatment under the country's former president, Nursultan Nazarbayev. But by late 2021, Kazakhstan's power grid was under strain from an influx of miners and new taxes. Blackouts and social unrest destabilized the industry. The complaint alleges that despite these clear risks, as well as unaudited financials, money laundering concerns, and a lack of interest from other investors, Bankman-Fried pressed ahead with outsized investments. Genesis Digital stands as one of Bankman-Fried's most reckless investments, with commingled and misappropriated funds, the trust said in its filing. Case comes as Bankman-Fried serves 25-year prison sentence after being convicted on 7 criminal counts, including fraud and conspiracy, tied to FTX's downfall. Big chillin', did some OT today, was busy. Nice, bro. I forgot you were grinding that Amazon job. That's dope. You're gonna be stacking. Straight stacking. Day's been good. Actually, got my gym membership back, so I hit the gym this morning. It's great. The chat is completely dead today. There's nobody typing in chat today. It's been like me and Survive and Thrive basically most of the day. Kev came in for a little bit. A couple people have brought in some brought in some topics and stuff, but It's been a dead-ass chat today, bro. It's been a dead-ass chat today. Los Polos TV threatens lawsuit against U-Haul, alleging worker leaked his ID verification photo. Claiming one of the company's workers leaked the photo. However, one of these interactions is going viral. Leaking a photo he used to verify his ID with U-Haul approximately 1 year ago. Streamer came across the photo during a broadcast in September 2025 while scrolling through X. First, he was confused, knowing he'd used the photo along with his government ID to verify his identity with U-Haul. Real explanation was somehow baffling. You aren't hacked, Polo said. Reading the poster's response aloud. I don't even know how to do that stuff. You mentioned a company I worked for at some point, and I looked stuff up. I took the screenshot to troll you, but I understand it was a bad thing to do. Oh, it's just some worker. Interesting. New gym baddies inbound? Yeah, probably not. Probably not. I just want to go hit my stair climber, hit my sauna, you know, maybe lift weights every now and then. And that's it. Like, I don't even... It's a whole new mindset going into the gym this time around. It's kind of nice. It's kind of nice only, you know, going there for the workout and not really caring about like who I see there or whatever. Like, it's actually really nice. Just like in my own world, basically. Costco reportedly stopped selling Xbox consoles online. Oh, we've already read that. Wait, what? PlayStation's franchise rewards program gates merch behind in-game trophies. What? Sony's introducing a new rewards program for PlayStation owners that lets you purchase exclusive physical merchandise if you've unlocked certain in-game trophies. Companies starting with rewards for 2 trophies from Sucker Punch's Ghost of Tsushima. Rewards for Ghost of Yotei are in the works, and Sony will presumably offer something similar for all of its most popular game franchises. The Ghost rewards you might have earned playing Ghost of Tsushima include a $25 why can't I say that? Commemorative pin shaped like a mask, unlocked for earning the game's Living Legend Platinum Trophy, or a $30 custom t-shirt with what looks like a gold woodblock print design, unlocked for earning the Mono No Aware Gold Trophy. In order to claim either reward, you'll have to log into your PlayStation account on a dedicated website before December 31st, 2025, and despite what the term, quote, reward might suggest, pay for either item to actually receive it. The reward in this case is access, not the merch itself. Sony's last attempt at some kind of loyalty or reward program was the short-lived and entirely digital PlayStation Stars program. While it was running, it let you earn stars for playing specific games or doing activities on your console, and then spend those stars on what amounted to digital models of characters or items. The program always felt a little bit like an NFT feature that the company had quickly reworked when blockchain tech fell out of style, and it made sense when it abandoned it. Rather than PlayStation Stars, franchise rewards, most similar to Bungie rewards, the program and online store the Destiny 2 developer has run since 2018. Via Bungie rewards, you can unlock commemorative shirts, jackets, and more for completing in-game activities in Destiny and Destiny 2, including the series' multi-hour raids. That's kind of cool, I guess. I don't know, I don't know. It's kind of cool, but it's not. It'd be cool, you know, to have a shirt where it's like you had to get that trophy, it took like 40 hours or 50 hours or something like that. Then you have the shirt that like shows you did it instead of just the trophy on the console. you know, you have some real world item you could wear to actually like show to people in the real world that you're a true gamer. A true gamer. Did Silent Hill F come out today? I see a lot of news on that. Oh, it comes out. Oh, it came out early access today. But yeah, September 25th. So Thursday is when Silent Hill F comes out. But if you have the deluxe edition, you can play now. Silent Hill F should be like a decent game. I've never played any of the Silent Hill games, but I've heard they're good. Doesn't sound like a reward. Yeah, but it's just something you can buy based off of your progress. It's not really about getting something for free. It's about having something based on your achievement. And it's probably like a custom item, so, you know, it would make sense why it would cost money. Probably costs a lot to create it. Potentially. Who knows? Who knows? Are there any videos to watch? I don't think I want to watch that. I don't think. Maybe we will if there's nothing else.
Hello.
Please tell me the Void uploaded. Of course not. Of course not. Of course not. What an L. What an L. We could stream Micron earnings. I don't know how hype that would be. I don't know if anyone... Let's see. Let's see if anyone's streaming this. Well, obviously them. I don't think anyone's streaming this besides them. We'll try it. I haven't tried to stream an earnings in quite a while. I doubt it'll matter. I doubt anyone will care. But we'll see. Micron Technology stock earnings live. MU stock. Micron. what else do we put in this for tags? Earnings live. Micron. Try that. We'll see what happens. It's been a while since we've tried to stream a stock earnings. How would it look if we change this? Oh, the GameStop logo covers it. Whoops. That could be okay. Why not? Let's see how it goes. What's up, Ruben? How you doing, bro? I'll be right back. Oy. We used to stream stock earnings back in the day, and people actually sometimes were interested in it if it wasn't like a super hyped stock, like a decently hyped stock. I mean, it really just matters how many people are streaming about it. If it's a bunch of streams, it's going to be tough. But I don't know. We'll see. We'll see. It's been a while since we've tried to stream in earnings. Probably helps to have a chart up too, but I don't. Alright, I need to get rid of this part. There we go. Still got 35 minutes till the market closes. And don't worry, GameStop's not moving, so you're not missing anything. Don't you worry. You're not missing anything. It's not going to move. I feel like this stock should be. I mean, it's a semiconductor. People should be excited about this. I guess we'll find out. Guess it really depends how it reacts. If it goes up, I'd imagine. I don't know. Maybe we'll see. I guess I don't know. Maybe I don't know if it's like similar to. I don't think every stock is similar to GameStop. Like I don't think just because it goes up, a bunch of people are gonna pile in here. I don't think that's how it's gonna be. But I guess we'll find out. I guess we'll find out. I don't even know what their like estimates and stuff are supposed to be. Point or 2.86 estimate. Micron brings all the boys. We'll see. We'll see. Anything's got to be better than GameStop right now. That shit don't even move. I'm gonna make my avocado toast, bro. Freaking hungry. Next time I'm gonna eat before the stream. I still don't know like what I should do though. Let me ask you guys, the people that are here. Do you prefer like the stream in the morning, or do you watch the stream in the afternoon? Or do you watch the stream all day? I don't expect anyone to answer because nobody's answered anything I've asked in the chat today. But I'm curious. Usually an all-day kind of guy. I'm just not gonna be here. Like, I'm gonna start going to the gym, so I just don't know if I want to start the stream in the morning and then go to the gym later, or just go to the gym and come to the stream later. I don't know which one I want to do. Just the chat's not active. You know, it could just be the day, but I've definitely noticed throughout the time of streaming that the chat's the most active in the morning. It's like as the day drags on, people tend it just seems like less people interact with the chat as the day goes on. I'd say later start, but I think it comes down to out of country homies, what's better in their time zone. I'd say the morning's better for them because the morning is, you know, late afternoon for them, or my morning is late afternoon for them. So I would say the morning would be better for the foreign people. All day work mornings though, hard to pay attention for me, you know, but either way it's okay. That's fair. Yeah, a lot of people work, so it makes sense why the chat's not active. Yeah, I'm just going off what I've noticed. Seems like the later in the day, the less for one thing, the less traffic that you get in the stream, but it seems like the less interaction you get as well. I just feel like the morning is where like most of the interaction happens in the chat. I mean, I guess I do have the history to go see. We can find out if my theory's correct, I guess. We actually have the data. We have the data to find out. Yeah, see, like even yesterday's stream, there was this whole almost hour of nobody chatting in the chat. And then, as it got towards the end of the day, more people started, but it seems like the most interaction happens in the morning for sure. Yeah, I mean this whole morning is dead on this stream, and randomly in the afternoon. This is the Jerome Powell stream, so I don't know if this really counts. And I guess it doesn't really matter. It's not as exponential as I thought it was. But it definitely does seem like the first hour or so of the mornings. So random. Guess it could just be random. I don't think that's a good any like viral or any stream with a lot of views. I don't think that's a good representation. Got trapped in morning and now have a chance to see what's up. I wasn't even here in the morning. I was at the gym. What's up, Unusual Market? Rosh, what's up? Sean Hazel, let's start chatting. People are busy. People are busy. Yeah, definitely. Definitely seems like the mornings are potentially the most active, but kind of just varies. It's also just random. I don't think the power pack streams really count. Whatever. Is whatever. Crazy price action. Yeah, it is volatile, but I wouldn't say crazy. You're just trading in a 50-cent range. I wouldn't consider that crazy, I don't think. What's up, working man? I'm lazy today. That's fair. That's fair. Yeah, it's still just a 50-cent range, though. It's really not much. Even back before the earnings, you were only trading like, I don't remember the daily swings, but you weren't really even trading 50-cent ranges. So I don't know. It's just not a lot. Like 50-cent range isn't much. It's more volatile than usual, it seems like. But I don't think it's really much. Can't really get a good representation off of that. Yeah, like 50-cent range is relatively common. Looks like it was more like 30-40 cent range back before the earnings. So, 50-cent range is a little more volatile, but it's nothing crazy. You're not seeing, $1-2 swings on the day. When you start seeing that, then maybe I'll say it's crazy, but 50-cent range on the day isn't really anything. Like 20 more minutes. I don't know exactly when Micron earnings come out. Jeez. This is all-time highs, too. I don't know. I don't really know what to expect from that. I wouldn't expect much, considering it's already at all-time highs. But I guess we'll see. Seems like the earnings are already priced in on this. Especially you look the past 5 days. I don't know what the options are pricing in or anything. But you've already had a somewhat of a run up this week, or the past week. I don't know. It's hard to predict earnings in general, but even harder when the stock's already pushed all-time highs. Crazy. Only a 3-hour stream today. Usually we'd be pushing 6 hours by now. It's a lot different starting later in the day. A lot different. It's kind of nice because, you know, I ran out of things to talk about and read like an hour ago. So it's kind of nice that we, you know, it's not 3 hours of just making shit up on the fly. It's only like an hour. I guess some people are interested in this Micron earnings. Getting a few people piling in. I honestly didn't think anyone would care about it, but I guess it's more than I think. You have 15 more minutes till the market closes. And then who knows when Micron earnings are. Not really sure. It's probably like 10-15 minutes after the close, maybe. We started the stream around like 11. What would that be? 12:30, 11:30. So like 10:30 is when we started the stream. Around there. Probably have to starting around 11. Normally I would just rely on the chat, but you know, No, there's no chat today. There's really no chat today. It's probably the only way we got past those like 6-hour streams is because of the chat. It's not easy. It's not easy to do it by yourself. The chat helps a lot. Why Micron? Just earnings. It's the only stock that has earnings. Still catching up for skipping work for golf. Paying for it today. Rip. That sucks. It's okay, it's worth it, bro. Had to get that golf game in. It's worth it. Just woke up on the chair. That's funny. What's my play on this earnings? All in GameStop. I don't trade earnings because I like making money. I like actually winning. So I don't trade earnings. Do I think Micron's gonna sink? Earnings is completely random, my friend. If you think anyone knows what's gonna happen with this stock, or if anyone says they know what's gonna happen, they're lying to you. Because earnings is 100% just gambling. So, doesn't matter what I think. Doesn't matter what anyone thinks. You're just gambling. And we'll see what happens. I flipped a coin. Well, there you go. At least you know how to trade earnings. At least you know how to trade earnings properly. There you go. Brandon gets it, bro. Brandon gets it. He's been here once or twice before. He's been on this earnings roller coaster a couple of times. That's funny. That's gonna give you your best answer. You know, flipping the coin. That's your best answer right there. MU to 220? Probably not. That's pretty unrealistic. Not pretty. That's extremely unrealistic. It's not going to 220. You know, earnings might be a complete random event, but it's not going to 220. I can tell you that right now. I think that's pretty certain. Could be a huge beat and it'll drop, or vice versa. I treat it like roulette and I chose my color. Well, there you go. So that's all you can do for options. At least you're at least you're aware enough to accept that reality, because a majority of stock traders don't get that because they get very bad trading information. So yeah, good to know that at least someone out there in the world understands this shit. You see the vision? There's no vision. You guys just don't understand the market if you think it's going to go that high. There's no vision. It's your lack of understanding. Has dropped even after beating earnings almost every time. They just have bad guidance quarter to quarter. That's fair. That's fair. You would have said the same thing about Oracle? Would I have? Oh, I didn't know that. Would I have? You mean Oracle? How much is Oracle up since their last earnings? Doesn't even show. It went from 250 to 300. That's okay. What does that have to do with this? I don't know what that has to do with anything. That's $100 more expensive stock. The percentage move to go from 250 to 300 is quite smaller than going from 160 to over 200. So yeah, I don't know. Percentages matter. Your opinion on the price doesn't. But it's all good. You know? Maybe one day you'll learn. I think Theta Gang will win on this one, boys. IV's disgusting. I mean, it's already at all-time highs. Like, how much more can you expect it to keep going up? That's like, you know, earnings is... I said this before anyone got here, but earnings is already hard to predict. I think it's even harder when the stock's sitting at all-time highs. But I agree with you. If it goes to 200, I'll be extremely surprised. I'll be extremely surprised. That's why I went calls. Well, options are a bad decision in general. You're playing you're already trading in a losing game, and you're making it even worse by trading options. You'd be better off just buying shares. What's up, son of Harold? Super bullish, but not sure how it'll move tonight. That's fair. It's completely random on options. Percentages matter. Your opinion on the price doesn't. I mean, it's true. Percentage is a big factor. I don't know the exact percentage of that, but going from 250 to 300, that's probably what, 20%? Yeah, about 20%, so 25%. Whereas going to 200 from 160, or I guess we'll do it correct, we'll do 166. That's probably like, it's probably 30, right? 30%? Yeah. It's about the same, actually. 25. It's about the same, actually. But if you're looking towards like 220, 240, that's like 30, 40% on Micron. That's a massive move for a 187 billion market cap. That's absolutely massive. What's Oracle's market cap? 800, wow, 900 billion? Okay. That's absolutely massive too. I thought Oracle was smaller. Thought it was quite a bit smaller. But who knows? I don't know. Trading options on earnings in general is not a good idea, so it's whatever. If you think it's actually going to go over $200, you might as well invest in it so you can actually make money instead of thinking that you're going to time it and predict it. Because the likelihood of that happening is extremely low. I think you'd be better off being an investor if you truly think it's going that high. Actually, I don't think that. I know that. I 100% know that it's a way better play to be an investor and trade shares rather than think you can trade options. It's good luck, good luck. Gotta pay to play? Nah, you just buy shares and then you don't have to waste your time trading a losing instrument. So I disagree. You could actually just be an investor and buy the shares, and you'd probably actually make money trading rather than trading options and losing most of the time. So I disagree. Oh, you said 180 strikes even being optimistic? Just don't even trade options. Like, what do you even need to trade options for? Like, literally, why wouldn't you just buy the shares so you could actually win? It doesn't even make sense to trade options. Shares makes it simple, easy, and profitable. I mean, you don't have option, you're not trading a instrument that loses value just because the stock doesn't move or because the volatility is less or because like there's so many factors and options that make it a terrible thing to trade. The only reason people trade options is because they think that, like, for some reason they think turning a $50 option into $500 matters when you could literally just buy like 50 or 100 shares and make the $500 that way. For some reason people think percentage matters because maybe they don't have the capital to actually buy shares. I'm not really sure. I'm not really sure why people trade options, but they do. And everyone who trades options thinks they're a genius for some reason, but I've never ever in my life met a profitable option trader, so it's a little weird. It's a little weird. This thing is moving all over. Looks like you're up. I don't think the earnings just came out yet. This thing is going everywhere, bro. If you have the capital, you can always exercise those options. If you have the capital, why wouldn't you just buy the shares in the first place? Makes 0 sense to even buy options. Are there earnings out? You get any numbers? It's going up. It's going up. But I don't see any numbers. One word and it'll change your life. Leverage. You mean the thing that everyone loses their money on? Leverage. I don't need to trade options. I make enough money being an investor. I don't need to make $50 on an option. Yeah, this thing's up massive right now. What are the numbers? I wonder if Twitter, or I don't see any numbers here on Yahoo. Not getting any numbers. But pretty big move, 3%. I'm sure that's what the options were pricing in, I'd imagine. They must have crushed. They must have crushed, judging by the price action here. Oh wait, it's right here. Looks like they beat by 5 or 6%. The estimate was 2.86, and the actual was 3.03. So they crushed on earnings per share. I don't know what like their revenue or anything like that is. Can you click on that? No. That doesn't do anything. I really doubt they would have their SEC filing up that quick. I'd be pretty surprised if it was up that quick. Yeah. What's up, Hugh G? You're up almost 5%. Thing's ripping. A ripping. They must have really crushed. Does anyone know the revenue, and does anyone know the earnings info in here? All I got was the EPS. It doesn't come out till 4:30. The earnings is already out. I just don't see any of the, the SEC filings just not out. If you went to, investor relations, you go to Micron investor relations. Should be on there. But the SEC filing won't get released until later on. Plus 50%. It's up 4%. So what did you tell me? It's up 4%, my guy. You good? Looks like it's only up 4%. Now it's not even up 4%. So I don't think you told me anything. I can't even get to their website. This is crazy. Their website must be getting overran by right now. Yeah, I don't know. I can't even get into their website to see the earnings report. It's like clapped out. It's weird. I don't know. For some reason, I can't even open their website. Well, and that's why you don't trade options, ladies and gentlemen. That's why, maybe it'll go back up, maybe, but it's pretty much why you don't trade options, ladies and gentlemen. If you had shares, you would have been able to sell at the peak there, 174. Isn't that crazy? Isn't it crazy how if you actually had shares, you would have been able to take profit? But now you're stuck with options and you have to wait till tomorrow and see what it actually opens at. Man, feels bad. I feel bad for any option traders out there. Anyone who actually traded shares, you probably crushed right there. You probably crushed if you actually traded shares, but option traders get clapped again. Option traders get clapped again. What do you know? I haven't been doing this for a long time or anything like that. Like, I don't know what I'm talking about. What do I know? What do I know about trading? Maybe it'll go up. Maybe it'll come back for you, but this should be a good learning lesson for anyone who thinks they're a professional option trader. I mean, hopefully it goes back up for you. Like, I hope it goes back up, but I hope it goes back up for you, but is what it is. Live and learn, I guess. We'll see what happens. It's hella volatile, though. It's hella volatile. Nobody can access the site to see what the earnings are. Yeah, their website crashed, bro. I don't know what's. There's too many people trying to get into it. Oh, there we go. It's right there. It's right here. I got in. So you got a revenue of 11.32 billion versus 9.3 for the prior quarter and 7.75 billion for the same period last year. So they crushed on their revenue. GAAP net income of 3.2 billion or 2.83 per diluted share. Oh, so they got their diluted share estimate correct on the EPS. Non-GAAP net income 3.47 billion or 3.03 per diluted share. Operating cash flow of 5.73 billion versus 4.61 billion for the prior quarter and 3.41 billion for the same period last year. Fiscal 2025 highlights: revenue of 37.38 billion versus 25.11 billion for the prior year. GAAP net income 8.54 billion or 7.59 per diluted share. Non-GAAP net income 9.47 billion or 8.29 per diluted share. Operating cash flow of 17.53 billion versus 8.51 billion for the year prior. Micron closed out a record-breaking fiscal year with exceptional Q4 performance, underscoring our leadership in technology, products, and operational execution, said Sanjay Mehrotra, Chairman, President, and CEO of Micron Technology. In fiscal 2025, we achieved all-time highs across our data center business and are entering fiscal 2026 with strong momentum and our most competitive portfolio to date. As the only US-based memory manufacturer, Micron is uniquely positioned to capitalize on AI opportunity ahead. Investments in capital expenditures net were $4.93 billion for the fourth quarter of 2025 and $13.8 billion for the full year of 2025. Adjusted free cash flow was $803 million for the fourth quarter of 2025 and $3.72 billion for the full year of 2025. Micron ended the year with cash, marketable investments, and restricted cash of $11.94 billion. On September 23, 2025, Micron's board of directors declared a quarterly dividend of $0.115 per share. Wait, is that new? They didn't have a dividend before? Payable in cash on October 21st, 2025 to shareholders of record as of the close of business on October 3rd, 2025. Yeah, I think that's new. I don't think Micron ever paid out a dividend before. So that could be another reason why it's up so massively. Dividends a pretty major thing for a lot of companies. So that's pretty dope. Let's see. Micron will host a conference call on Tuesday, September 23rd, 2025 at 2:30 p.m. Mountain Time to discuss its fourth quarter financial results and provide forward-looking guidance for its first quarter. Live webcast, the call will be available online. Should we listen to the earnings call? There's quite a bit of people here. Do you guys want the earnings call? I think the earnings call starts in like 15 minutes or something like that. Make sure you guys hit that like button if you have not. There's over 60 people in here. We only got 20 likes. That's crazy. A lot of earnings, big good. Price goes down. Yeah, it's because a lot of stocks have a run up into the earnings. So it's already like the gain's already been priced, basically, in a lot of cases. But there's still a massive move on Micron, I would say. You know, we'll see if it can hold up. After hours moves usually don't mean a lot. Thought it was really Lambo season. Fuck, I wish. I wish. Would have been Lambo season indeed. I remember, did you say you can send people cards if they have their PSA vault? How is that possible? Because you get a vault number. I'm pretty sure you can just send it to them. Not really sure exactly how it works. Maybe you're only able to send physical cards to other people's vaults, but you'd probably have to message Nat Turner or something. I thought you could do vault to vault transfer though. Maybe you'd have to ask Nat Turner. Maybe that's the only way to do it. But if you have a physical card, you should be able to send it no matter what. Because you would just use their vault code. You know, get their name and vault code and physical or the address for the vault. But yeah, I don't know. I think maybe the only way to do it, like from vault to vault, is if you message Nat Turner. I don't know if they actually have a way to do it. I just know you can do it. Because I've seen on Twitter that he's asked people to message him for like vault to vault transfers and stuff like that. So like, I know you can do it, but you might have to message him. There might not be a way to just do it. What time does the start? It should be here in like 15 minutes. I'll have to go back here. Where is it? Where is it? Right here. Wait, why can't I? Should be Should be on this website. I can't even get on the website, bro. Something's up with that website. What the heck, man? This website's collapsed, son. I might not even be able to watch the earnings call. I can't even open the website now. You guys wrecked Micron's website, bro. You guys clapped Micron's website. Why you doing that? Why you doing that? You know, we might not even be able to get in the earnings call. The website's clapped. I'll keep trying, but we might be clapped here. And I don't have a Yahoo account, so I can't join through here. You guys just had to clap the website, didn't ya? Too many people. Yeah, I'm sure that website's never got this much traffic. I'd imagine. They've probably never gotten it. It's a lot of traffic. Nah, I don't have Robinhood Gold or Motley Fool. I'm sure they'll get it figured out before they start the call. I'd be surprised if they started the call without people being able to access it. It'd be pretty wild if they did the call without anyone being able to access it. I mean, I wouldn't be surprised, but that's crazy. That's crazy. Well, RIP option traders. RIP option traders. I can't believe their website is clapped. Like, that is so crazy. I've never seen an investors relation website completely go down because of an earnings report. I think that's new for me. I don't think I've ever seen that before. Make sure you guys hit that like button. We got over 50 people in the stream and only 20 likes. Like, that's crazy. That's crazy. I'm out here trying to get this in earnings call for you. I'm trying, man. I'm trying to get this earnings call for you. The website just it won't let me go in. I'm trying, though. I'm trying. Whoa, that's new. It's giving me a count. That's crazy. That's crazy. I've never seen that before. That was weird. It was like giving me a countdown of when it was gonna send an ad out. Like, I've never seen that before. That was so weird. Well, the earnings call starts in like 5 minutes, so it's got to come back up. Man, oh man. You know, I tried to tell you guys not to trade options. Everyone wanted to think they were smart, though. That's typical trading stuff, you know. Don't listen to the dude who's been doing it exponentially longer than you. No, don't do that. Listen to fake traders on Discord. That's how you make money these days. Don't listen to the guy who actually knows this game. You know, keep trading those options. Keep trading those options. Let me know how it works out for you. There's got to be a way to get this earnings call. I don't think there's a... It's not very professional of them if they can't make sure the earnings call can be accessed. Yeah, I mean, if you're already a Micron investor, you probably got an email for it. But, you know, most people aren't investors. Most people are traders. So, yeah, I don't know. This is weird. Like I said, I've never seen this happen before. Very new. It would be nice to be able to access it. There's a lot of people who obviously want to check out the earnings call. There's a lot of people in the stream right now. But you guys are all trying to get in the website. If you would just let me get in the website, we could listen to this earnings call together. But everyone's trying to fucking... Everyone's trying to get into this thing. And it's not going to work if we're all just clicking and trying to get in at the same time. It's just not going to work. Yeah, the stream's popping right now. Stream is popping right now. Everyone's looking for this earnings call though. $56 souls in the stream. Beautiful souls in the chat. I mean, at least we got to see the earnings before the website crashed. That's a bonus, I guess. I wonder if they have the SEC filing up. Maybe they have a SEC filing up. I mean, I know that doesn't help us with the earnings call, but no SEC filing. Here's our press release. It's working for you. Well, aren't you lucky? I feel like you're lying, though, because it's not working. Jeez, they made 8.5 billion. They absolutely crushed. I don't know if you guys are aware of this, but they absolutely crushed. I don't know if you're aware, but they wrecked. I don't know what all their net income's from, but they murdered. Last quarter or last year, is this a quarterly? Is this a 10Q or a 10K? I don't know. But last year or last quarter of the last year, the same earnings report. Oh, so this is Q4. They only made 700 million, but this year they made 8.5 billion. Like, that's insane. That's insane. They absolutely crushed on net income. Can we get in this yet? It's just customer service music for now. Well, that's a rip. I mean, hopefully they fix their website before they start it. That'd be nice. That'd be nice. You know, I'm just trying to watch. It actually started. No. How did you get in? How did you get in? I have shares at 104. Yeah, that's a smart trade. That's a smart. See that, Ali H. That's a smart person right there. Everyone else in here is talking about their little option trades they just got wrecked on. Little do you know, there's actual real investors out in the world who made money. You love to see it. I love to see it. I love to see that there's actual real investors in the world. So God bless you, Ali. God bless you. I can access it on my phone. For some reason, I can't access it here. I can access it on my phone, though. So if I find the earnings call, I'll just put my phone up to the microphone. Where is it? Where's the earnings call? I'm trying to find it. Don't worry, guys. I'm finding it. I'm finding it. Boom. Hold on, chat. Make sure you guys hit that like button. Make sure you hit that like button. There's over 100 people in here and we only have 30 likes. That's crazy. I'm about to bless you guys up with this earnings call.
Global Micron team for their focus and execution, which made these results possible. As we enter fiscal 2026, Micron is positioned better than ever. Our leadership in advanced technologies, including HBM, 1-gamma DRAM, and G9 NAND, enables a differentiated product portfolio that drives strong ROI.
How does it sound?
AI-driven demand is accelerating, and industry DRAM supply is tight. Our HBM performance has been strong, and robust demand, tight DRAM supply, and disciplined execution has significantly strengthened the profitability of the rest of our DRAM portfolio. In NAND, our higher mix to data center and improving industry conditions are contributing to profitability. Our fiscal Q1 guidance reflects new records for revenue and EPS. In addition to being a demand driver, AI is also a powerful productivity driver for Micron, contributing to our strong competitive position and financial performance. We are using AI throughout the company across product design, technology development, manufacturing, and other functional groups.
Awesome.
We have seen strong adoption and as much as a 30 to 40% productivity uplift in select Gen AI use cases, such as code generation. In design simulation, AI is accelerating our silicon to systems design cycle through advanced modeling and reduced iterations. In manufacturing, we have driven a 5x increase in wafer images analyzed in the past year and double the amount of useful data and telemetry collected and analyzed from our fab tools, all of which improve our yield performance. These AI capabilities enable us to achieve superior product specifications, quality, and time to market at scale. Turning to technology and operations, we are proud to announce that our 1 gamma DRAM node reached mature yields in record time, 50% faster than in the prior generation. We are the first in the industry to ship 1 gamma DRAM and will leverage 1 gamma across our entire DRAM portfolio to maximize the benefits of this leadership technology. We achieved first revenue from a major hyperscale customer on our 1 gamma products for server DRAM in the quarter. Our G9 NAND production ramp has been progressing well while scaling at a pace aligned with market demand. We have ramped our G9 NAND node for both TLC and QLC NAND and have qualified our G9 NAND for enterprise storage. In fiscal Q4, we received a CHIPS grant disbursement following the completion of a key construction milestone for our new high-volume manufacturing fab in Idaho, with the first wafer output expected to begin in the second half of calendar 2027. We began design work for our second Idaho manufacturing fab, which will provide additional capacity beyond 2028. In New York, we have completed initial phases of our environmental impact study and continue to work with state and federal authorities towards starting ground preparation. In fiscal Q4, we installed the first EUV tool for our Japan fab to enable 1 gamma capability, which will complement our existing 1 gamma supply from our fabs in Taiwan. The time from receiving this tool to completing installation was a record for all EUV tools globally, demonstrating Micron's expertise with this equipment. We plan to continue to invest in our Japan production capability to meet requirements of the advanced memory technologies of the future. Our continued HBM assembly and test investments position us well to meet growing HBM capacity requirements in calendar 2026. We are making good progress on our Singapore HBM assembly and test facility construction, which is on track to contribute to our HBM supply capability beginning in calendar 2027. Turning to our end markets. In data center, we now expect calendar 2025 total server units to grow approximately 10%, up from our prior expectations of mid-single digits percentage growth. The calendar 2025 traditional server growth outlook has strengthened significantly from flat to growth in the mid-single digit range. We believe this change in outlook is in part related to the growth of AI agents and the traditional server workloads agents initiate as they execute tasks on behalf of users. Continued growth in traditional server applications in enterprises is also contributing to additional demand growth. In addition to traditional servers, AI server growth continues to be very robust. This growth in both traditional and AI servers is driving strong demand for our DRAM products. Data centers require some of our industry's most complex and high-value products, and meeting this demand has presented several opportunities to enhance our product mix and profitability. In fiscal 2025, Micron's data center business reached a record 56% of total company revenue, with gross margins of 52%. Our HBM business has posted many quarters of strong growth. In fiscal Q4, our HBM revenue grew to nearly $2 billion, implying an annualized run rate of nearly $8 billion, driven by the ramp of our industry-leading HBM3E products. We are pleased to note that our HBM share is on track to grow again and be in line with our overall DRAM share in this calendar Q3, delivering on our target that we have discussed for several quarters now. Micron's HBM4 12-high remains on track to support customer platform ramps even as the performance requirements for HBM4 bandwidth and pin speeds have increased. We have recently shipped customer samples of our HBM4 with industry-leading bandwidth exceeding 2.8 terabyte per second and pin speeds over 11 gigabits per second. We believe Micron's HBM4 outperforms all competing HBM4 products, delivering industry-leading performance as well as best-in-class power efficiency. Our proven 1-beta DRAM, innovative and power-efficient HBM4 design, in-house advanced CMOS-based die, and advanced packaging innovations are key differentiators enabling this best-in-class product. For HBM4E, Micron will offer standard products as well as the option for customization of the base logic die. We are partnering with TSMC for manufacturing the HBM4E base logic die for both standard and customized products. Customization requires close collaboration with customers, and we expect HBM4E with customized base logic dies to deliver higher gross margins than standard HBM4E. Our HBM customer base has expanded and now includes 6 customers. We have pricing agreements with almost all customers for a vast majority of our HBM3E supply in calendar 2026. We are in active discussions with customers on the specifications and volumes for HBM4, and we expect to conclude agreements to sell out the remainder of our total HBM calendar 2026 supply in the coming months. Micron's LPDDR5 for servers had over 50% sequential growth in the quarter and reached record revenue. In close collaboration with NVIDIA, Micron has pioneered the adoption of LPDRAM for servers, and since NVIDIA's launch of LPDRAM in their GB product family, Micron has been the sole supplier of LPDRAM in the data center. In addition to our leadership in HBM and LP5, Micron is also well positioned with our GDDR7 products, which are designed to deliver ultra-fast performance with pin speeds exceeding 40 gigabits per second, along with best-in-class power efficiency to address needs of certain future AI systems. In data center NAND, AI inference use cases such as KV cache tiering and vector database search and indexing is driving demand for performance storage, while AI server growth is driving demand for high-capacity SSDs for capacity storage. Micron is gaining share in these markets with our customer focus, technology leadership, vertical integration, and execution. We strengthened our portfolio with the industry's first G9 NAND data center products, including first-to-market PCIe Gen 6 SSDs. Near term, we see continued growth in the data center storage market, with HDD supply shortages expected to improve NAND demand and drive a healthier supply-demand environment. Turning to PCs, end-of-life of Windows 10 and greater adoption of AI-enabled PCs are driving an improved PC demand outlook. We now expect PC unit shipments to grow at a mid-single-digit % level in calendar 2025 versus our low single-digit % growth expectations previously. During the quarter, we achieved our first OEM customer qualification of our 16 gigabit, 1 gamma based D5 and commenced volume shipments. In NAND, we successfully qualified our first G9 NAND SSDs in both performance and mainstream categories with OEM customers. Our strong SSD portfolio enabled us to achieve record client SSD revenue in the quarter and in fiscal year 2025. Smartphone unit shipment expectations remain unchanged at low single-digit % range in calendar 2025. An increasing mix of AI-ready smartphones continue to be a key catalyst for DRAM content growth in mobile devices. Notably, 1/3 of the flagship smartphones shipped in calendar Q2 contained 12 gigabyte or more, and given recent product launches from Apple, Samsung, and other smartphone OEMs, we expect this mix to increase over the coming quarters. In fiscal Q4, Micron ceased future mobile managed NAND product development in order to focus our resources and investments on higher ROI opportunities in our portfolio. We will continue to support existing mobile managed NAND products. Micron remains committed to serving the mobile DRAM market with our industry-leading portfolio. In fiscal Q4, we achieved OEM qualification of our first 10.7 gigabit per second 1 beta second generation LP5X products at 16 gigabyte and 24 gigabyte capacities. Turning to auto, industrial, and embedded. In automotive, trends such as ADAS and AI-enhanced in-cabin experiences require significantly higher memory and storage content, making it a higher growth part of the industry. In embedded, we expect physical AI such as drones, advanced robots, and AR/VR to become a more important driver of demand over time. Automotive and industrial demand strengthened throughout the quarter, exceeding our initial forecast. We are seeing improved profitability in this business with stronger pricing and an increased mix of advanced technology nodes with greater adoption of D5 and LP5 products. We continue to see supply constraints in D4 and LP4. In June, Micron announced investments in our Virginia facility in an effort to support our long life cycle customers' demand for D4 and LP4. Now turning to our market outlook. Customer inventory levels are healthy overall across end markets. We expect calendar 2025 industry DRAM bit demand growth to be in the high teens % range, somewhat higher than our previous outlook. We expect calendar 2025 industry NAND bit demand growth to also be higher than our previous outlook, now in the low to mid-teens % range. We expect Micron's calendar 2025 bit supply growth to be below industry bit demand growth for non-HBM DRAM and for NAND. Robust data center demand, including the uptick in server unit growth, has contributed to a tight industry DRAM environment and strengthened NAND market conditions. Additionally, broadening of demand across end markets has also constrained DRAM supply. On the supply side, we expect low supplier inventories, constrained node migration as industry supports extended D4 and LP4 end of life, longer lead times and higher costs globally for new wafer capacity, all to limit the pace of supply growth for DRAM in 2026. In calendar 2026, we anticipate further DRAM supply tightness in the industry and continued strengthening in NAND market conditions. Over the medium term, we anticipate industry bit demand growth of mid-teens CAGR for both DRAM and NAND. Micron invested $13.8 billion in CapEx in fiscal 2025. As we continue to make 1 gamma DRAM and HBM-related investments, we expect fiscal 2026 CapEx to be higher than fiscal 2025 levels. DRAM front-end equipment and fab construction will drive higher capital spending in fiscal 2026. Our continued technology node migration to 1 gamma will provide the majority of our supply growth for DRAM in calendar 2026. As we transition more products to 1 gamma, our 1 beta capacity will support HBM growth in 2026. I'll now hand over the call to Mark to provide more color on our fiscal fourth quarter and fiscal 2025 financials.
Thank you, Sanjay, and good afternoon, everyone. Micron delivered strong results to close out the fiscal year, with Q4 revenue, gross margin, and EPS all exceeding our updated guidance. For the full year, we achieved record revenue of $37.4 billion, up 49% year over year. Gross margins expanded to 41%, a 17 percentage point improvement from fiscal 2024. EPS reached $8.29, reflecting a 538% increase compared to the prior year. Total fiscal Q4 revenue was $11.3 billion, up 22% sequentially and up 46% year over year, and a quarterly record for Micron. Higher sequential revenue was driven by growth across our end markets, including record data center revenues and strong sequential growth in consumer-oriented markets. Fiscal Q4 DRAM revenue was a record $9 billion, up 69% year over year, and represented 79% of total revenue. Sequentially, DRAM revenue increased 27%. Bit shipments increased in the low teens %, driven by strong demand across all end markets. Prices increased in the low double-digit percentage range, driven by tight industry DRAM supply, pricing execution, and favorable mix. Fiscal 2025 DRAM revenues were a record $28.6 billion, up 62% year over year. Fiscal 2025 DRAM all-in costs, inclusive of HBM, were down by low single digits percentage points. Fiscal Q4 NAND revenue was $2.3 billion, down 5% year over year, and represented 20% of Micron's total revenue. Sequentially, NAND revenue increased 5%. NAND bit shipments declined in the mid-single-digit percentage range, and prices increased in the high single-digit percentage range due to favorable mix. Fiscal 2025 NAND revenues were a record $8.5 billion, up 18% year over year. Fiscal 2025 NAND all-in cost reductions were around low teens percentage. Now turning to quarterly financial performance by business unit. Our new segment disclosures for our business units, which you see starting in today's press release and will see in future filings, highlight the improvements in our profitability and changing business mix. The Cloud Memory Business Unit and Core Data Center Business Unit combined represent the totality of our data center business. Cloud Memory Business Unit revenue was $4.5 billion and represented 40% of total company revenue. CMBU revenues were up 34% sequentially, driven by robust bit shipment growth. HBM revenues reached a new quarterly record. CMBU gross margins were 59%, higher by 120 basis points sequentially, supported by cost reductions. Core Data Center Business Unit revenue was $1.6 billion and represented 14% of total company revenue. CDBU revenues were up 3% sequentially. CDBU gross margins were 41%, up 400 basis points sequentially, driven by higher pricing and favorable mix. Mobile Client Business Unit revenue was $3.8 billion and represented 33% of total company revenue. MCBU revenues were up 16% sequentially, driven by higher DRAM shipments and improved pricing. MCBU gross margins were 36%, up 12 percentage points sequentially, driven by higher pricing and favorable mix. Automotive and embedded business unit revenue was $1.4 billion and represented 13% of total company revenue. AEBU revenues were up 27% sequentially, driven by higher bit shipments. AEBU gross margins were 31%, up 540 basis points sequentially, driven by higher pricing. The consolidated gross margin for fiscal Q4 was 45.7%, up 670 basis points sequentially. Sequential gross margin improvement was driven by favorable product mix, better DRAM pricing, and strong execution on cost reductions. Operating expenses in fiscal Q4 were $1.2 billion.
Y'all should listen to Survive and Thrive. He knows what he's talking about.
In line with our guidance range.
All right, later, Moose. Have a good one, bro.
The sequential increase was driven primarily by higher R&D. We generated operating income of $4 billion in fiscal Q4, resulting in an operating margin of 35%, up 820 basis points sequentially and 12 percentage points year over year. Fiscal Q4 taxes were $471 million.
Nah, you should just buy shares and be an investor instead of wasting your time thinking you can trade options. You'd be better off just being an investor.
Non-GAAP diluted earnings per share in fiscal Q4 was $3.03, with 59% sequential growth and 157% versus the year-ago quarter. Turning to cash flows and capital expenditures, in fiscal Q4, our operating cash flows were $5.7 billion, and our capital expenditures were $4.9 billion, resulting in free cash flows of $803 million. The increase in capital expenditures was driven by planned investments for DRAM. For the full year fiscal 2025, we generated $3.7 billion in free cash flow, representing 10% of revenue. Ending inventory for fiscal Q4 was $8.4 billion, or 124 days.
Yeah, of course I realized you can do both, but people who trade options never win. You know, people who trade options never make money, so why would you waste your time doing something you can't even make money in? Doesn't really make sense.
DRAM inventory days are below target levels, and NAND inventory days improve sequentially. On the balance sheet, we held $11.9 billion of cash and investments at quarter end and maintained $15.4 billion of liquidity when including our untapped credit facility. During fiscal Q4, we reduced debt $900 million through paydown of $700 million.
Options are terrible, bro.
And repurchase.
There's not a single person in here who's a profitable option trader.
We closed the quarter with $14.6 billion of debt, maintaining low net leverage and a weighted average debt maturity of 2033. Now turning to the outlook for the first fiscal quarter. We expect price, cost, and mix to all contribute to strengthening gross margins in Q1. Operating expenses for fiscal Q1 are projected to be approximately $1.34 billion, with the sequential increase driven by R&D related to data center product innovation.
If you guys are up that much, I'd be very surprised. If you're up that much this year, how much have you lost the previous years?
Compared to fiscal 2025,
because I think you're full of it.
52-week fiscal year. As a result, fiscal Q4 2026 OPEX will reflect the effect of an additional work week in the quarter. We expect a fiscal Q1 and fiscal year 2026 tax rate of around.
In my lifetime, I'm negative, but mainly just learning. Exactly.
We expect
exactly. In your lifetime, you're negative. Don't sit and talk about how you're up 10K this year when you haven't made fucking profit.
A reasonable quarterly baseline for the planned capital
Crazy.
spend in fiscal 2026.
Crazy.
We will
absolutely
insane.
Insane.
Discipline as we pursue our growth opportunities. We expect free cash flow to strengthen in fiscal Q1.
Crazy, bro.
And we project significantly higher annual free cash flow year over year in fiscal 2026. Any impacts that may occur due to potential new tariffs are not included in our guidance. With all these factors in mind, our non-GAAP guidance for fiscal Q1 is as follows. We expect revenue to be a record $12.5 billion, plus or minus $300 million. Gross margin to be in the range of 51.5%, plus or minus 100 basis points. And operating expenses to be approximately $1.34 billion, plus or minus $20 million. Based on a share count of approximately 1.15 billion shares,
Nug the Rex gets
EPS
it.
to be a record $3.75 per share.
I'm sorry. I'm trying not to talk. I'm trying not to talk, but when people come in here and act like they're profitable option traders, you know they're full of shit. Anyone who says they're a profitable option trader is full of shit. 100%.
As we have highlighted today. We have strong momentum entering fiscal 2026 with a robust fiscal Q1 demand outlook led by data center and the most competitive position in our history. Over the coming years, we expect trillions of dollars to be invested in AI, and a significant portion will be spent on memory. As the only US-based manufacturer of memory, Micron is uniquely positioned to benefit from the AI opportunity ahead. Thank you for joining us today. We will now open for questions.
Yeah, hit the like button. Hit the like button.
Thank you. As a reminder, to ask a question, you will need to press *11 on your telephone. To remove yourself from the queue, you may press *11 again. Please limit yourself to one question and one follow-up to allow everyone the opportunity to participate. Please stand by while we compile the Q&A roster.
Sounds like I don't learn when I lose.
Comes from the line of Timothy Arcuri of UBS. Please go ahead, Timothy.
You can think whatever you want. I've made more money trading than you could imagine. Because I don't lose. I only win. Because I don't trade options.
$2.2 billion sequential $1.2 billion sequential revenue. Can you help us how that splits out between DRAM and NAND? And I guess any gross margin puts and takes you might have as well would be helpful.
Yeah, Tim, you were breaking up a bit at the end, but I believe I've got it. In the first quarter, we'll be heavier DRAM mix than
don't worry.
NAND.
You guys will get tired of losing eventually.
As you mentioned, we're not going to break out bits and ASP, but we are
selling covered calls considered trading options. Not really.
Basis points.
I don't really consider that trading options.
It is split across mix, pricing.
Exactly,
and,
Eduardo. Exactly.
Execution on our cost reductions.
You know, the people getting offended are the people who aren't profitable. Because anyone who's actually profitable,
for DRAM
they wouldn't care. They wouldn't care what I'm saying. The people trying to defend option trading are the people who are addicted to it.
Essentially, strong demand and supply factors at work, as you heard in the script today. On the demand side, data center spend remains robust, projected to grow. Traditional server spend is improving and expected to grow. Refresh and inference workload demand drivers, and then PC, smartphone, auto all have increased content growth, and that's becoming clearer. And then on the supply side, we'll get into that more in the Q&A here, but that is tight as well due to a number of factors that are structural. We're focused on our execution, and again, sequentially here, expect price, mix, and strong execution to drive that 580 basis point margin expansion.
Thanks a lot, Mark. And then, Sanjay, I guess you had previously guided us to like $100 million HBM TAM by 2028, but since you gave us that number, there's been some massive numbers given out, some TAM numbers by NVIDIA and some of the investments that are going on in OpenAI and whatnot. So it's obvious that the compute TAM is much bigger than what I think you probably would have assumed at that time. So do you have an update to that number? I would assume it's bigger than that number, and maybe you can comment on sort of what you see next year. I know this year you said
the call is glitching.
Like mileposts for next year, and update to that 100 billion in 2020. Thanks.
So Tim, your connection is poor, and you were breaking up a lot, but I think I got the gist of your question. What we had said before regarding longer term HBM TAM, we had said that by 2030 we expect HBM TAM to reach.
I'll diss on whoever I want because I like making money. I don't like being a losing trader who acts like I make money.
Will grow faster than the DRAM CAGR. And we see that
I like to actually make money, not pretend like I make money.
As well, in terms of bits in HBM will outgrow the overall DRAM bits. And of course, as we look ahead, the value proposition of HBM continues to increase. And of course, as we talked about, HBM now in 2026 transitioning to HBM4. Micron, of course, well positioned. Market is starting to require even higher performances, and we today pointed out that Micron with our HBM4 will have the highest performance product with over 11 gigabits per second, and of course, highest power efficiency as well. So the specs of HBM are becoming increasingly more demanding, and which is exciting for us because we are very well positioned with these products. And this just means the value proposition of HBM just continues to grow. So we definitely continue to see strong long-term growth, and very excited about all these various announcements of massive data center infrastructure spend. We have talked about trillions of dollars of spend over the next several years. And of course, memory is very much at the heart of this AI revolution. This means a tremendous opportunity for memory and certainly tremendous opportunity for HBM. So we feel very good about HBM longer term opportunities, good about HBM opportunities in 2026, and very good about Micron's positioning with our very strong product portfolio and strong execution track record and the trust that we have built with our customers and our ability to supply quality and meet our customers' volume requirements. So exciting times ahead, and we are, of course, continue to work very closely with our customers.
Thanks a lot.
Thank you. Our next question comes from the line of Vivek Arya of Bank of America. Please go ahead, Vivek.
Thank you for taking my question. I'm curious, how do you see the transition from HBM3E to 4? When do you expect the crossover next year? And I think as part of that, you mentioned that the pricing for 3E is settled for 26. And I'm curious, what is the direction of that pricing versus what you're getting now? Is it higher or lower? And do you expect your 3E share to stay the same or change next year?
So with respect to HBM4, this is, of course, we will be at the forefront of this production ramp, very much aligned with customers' timing. And again, as we have mentioned, that we have the best product in the industry with highest performance over 11 gigabit per second, and we have sampled that product, as well as low power. So industry-leading product performance. And so we will be ramping it up in line with customer demands. Of course, first production shipments in CQ2 of 26 timeframe, and production will ramp during the course of 2026, second half of 2026, again, in line with customer demand. And overall, in 2026 versus 2025, we see our share growing, product well positioned. We are not commenting on the pricing of HBM3E. We have told you that HBM3E, we have pricing agreements completed with almost all customers for vast majority of our HBM3E supply in 2026, and we are in discussions regarding HBM4 with our customers. What I will tell you is that supply is tight. We expect healthy demand supply environment in 2026 for overall DRAM, and that bodes well for profitability of DRAM, profitability of HBM, and of course profitability of non-HBM as well, which is experiencing tight supply.
And for my follow-up, maybe Mark, on the gross margin side. So what is just conceptually, how do you think about the puts and takes of gross margins as you go through the rest of the year, this 51.5? Is this kind of the baseline, and as long as sales grow, can you expand off of this level? And then, related to that, when I look at your cloud data center business, gross margins 59%, operating margins 48%, how much more room is there to expand from those very strong levels right now? Thank you.
Yeah, Vivek, so we're not providing out-quarter guidance, but what we will say is that we believe, or we expect, gross margin to improve sequentially first to second quarter. And it's on this tight DRAM supply and the associated pricing, along with NAND business continuing to improve. And then just mix effects as we continue to steer bits towards higher value markets. And then our cost performance continues to be good. As mentioned in the prepared remarks, these supply demand factors are, we believe they're durable. On the demand side, data center spend continues to increase. I talked earlier about traditional server spend, and then the edge and auto having increased content. And then on the supply side, customer inventory levels are healthy. Our supply is lean. Our DRAM inventories are below target. NAND continues to improve. We are, we're working to be as efficient as we can in providing a supply response. We're doing node transitions, but as the industry extends support for D4, that's constrained those node transitions. And then finally, it just takes a long time and is expensive to add new clean room space. And we all know the silicon intensity of HBM creating the urgency for that capacity requirement. So it's a good setup as we go into 26. And we delivered this strong guide on the first quarter gross margin. And we expect to see gross margins up in Q2. I also want to reiterate something Sanjay mentioned, that we expect margins to be healthy in both HBM and non-HBM in 26. So I'll leave it at that on the out-quarter guidance.
Thank you.
Thank you. Our next question comes from the line of C.J. Muse of Cantor Fitzgerald. Your line is open, C.J.
Yeah, good afternoon. Thank you for taking the question. I guess first question, it certainly feels like in the last month or two there's been an inflection in DRAM demand led by inference hyperscalers. So curious if you could kind of speak to what you have seen, the breadth of demand, and particularly the sustainability of that, and would love your thoughts. You've talked about tightness expected into fiscal 26. Your thoughts into this, what is typically seasonally slower February quarter. Should we see kind of normal seasonality, or are the supply trends so limited that things can hold up much better than kind of normal seasonality?
So, of course, we are not providing you FQ2 guidance at this point, but certainly the AI trends are strong, and as you noted, not just in training but inference as well. And as the AI applications broaden, innovations increase, greater different architectures, all of this is only continuing to broaden the demand vector for AI, in the data center as well as on edge devices such as smartphones. In the data center, of course, AI servers have driven strong demand, as we have all known, particularly with just the increasing demand and increasing demand for all DRAM, not just HBM, but LPDRAM, high-density DRAM modules. But we are also seeing traditional server demand, as we noted in our remarks, increase as well. So this is really driving a strong growth trend for overall for the industry. And then the demand vectors are broadening, as I noted, smartphones in particular. You have seen some recent launches of and shipments already starting of AI-enabled smartphones, which have higher content of DRAM in them versus the prior generation phones. And of course, PCs is another tailwind, AI PCs and end of life for Windows 10. So the AI PCs are a tailwind for DRAM content as well. So overall, AI trends are strong, and this is across data center, across AI-enabled smartphones and AI-enabled PCs. And this is what leads to strong demand in 2026, across 2026. And we have talked about tight supply as well. Mark just laid out the factors for tight supply, which we also discussed in our prepared remarks. So overall, we look forward to healthy demand-supply environment in calendar year 26 for us.
Very helpful.
And I guess customer inventories as well as supplier inventories are in good place. I mean, supplier inventories are actually running lean. Micron DRAM supply is very tight.
Thank you for that. As a quick follow-up on CapEx, Mark, it appears net CapEx implied $18 billion versus $13.8 last year. I think you talked about front-end equipment versus clean room space and DRAM. Is there a way to kind of partition how much, on equipment versus clean room? And then can you share with us what the implied gross CapEx is for fiscal 26? Thanks so much.
Yeah, we've not laid out in detail. It's just that our spend in 26 will be vast majority will be for DRAM, and we've got construction and facilities related to that, some tools for node transitions, and beginning to install for new greenfield. As it relates to, you're right that we guided, framework to be at around $18 billion. We will generally talk about CapEx in the context of net, which is gross CapEx offset by proceeds from government incentives. We're not going to talk about the gross and net for 26. But you can see the components, you can back into the components here on what you've seen in the filings for the gross spend in 25, and then the government incentives. And so we ended up at 13.8 net, and we were at 15.8 gross with $2 billion of government incentives in 25. You'll see that going forward, and the government incentives in 25 are largely the U.S.
Nobody cares about your opinion, Choi. Nobody gives a fuck.
More about those in the future.
Get your life together.
Thank you. Our next question comes from the line of Harlan Sur of J.P. Morgan.
Coming into a random YouTube chat, thinking anyone cares about your opinion on stocks.
Thanks for taking my question. Days of inventory are now at your target levels as you had expected previously, and within that, DRAM is actually below your targets, right? So given the strong 3E 12 high RAM, continued strong demand pull for non-AI DRAM, how are you guys thinking about your total and DRAM inventories exiting this quarter? Will days of inventory continue to come down? And then just given the overall supply tightness, are your lead times extending and customers placing orders further in advance? And is this better visibility what gives the team confidence on continued tightness into calendar 26?
Yeah, Harlan, I'll cover that. We do expect inventories to remain at or better on DIO than we've seen in the fourth quarter.
Hey, for sure, Saucy. I appreciate you, bro.
Very tight,
thanks for being chill.
Through the year, so
there's a lot of little babies in here who are mad that I talk shit on their options.
NAND,
so it's nice that we have some chill people in here.
NAND, and that market
Too many little sensitive babies in the world. We need more chill people like you.
Decrease as well.
And of course, we work closely with our customers, and customers are fully understanding that the demand environment is strong and the supply is very tight, and the DRAM and supply outlook is tight. So we work closely with the customers. And I just want to point out that as we look ahead at our supply, we are looking at 1 gamma ramp to support our demand. In non-HBM products, HBM products, we will support them with our 1 beta. And of course,
yeah, you know, maybe me having a bunch of videos on options should show you that I actually know what I'm talking about. I don't know, just a crazy idea. Crazy idea that I have 32 videos on options, yet I hate options. You know, maybe you should use your little brain and think about the reason why. And it's because I like making money. I don't like pretending like I make money, like I said.
Customers are looking for as much as 25% more bandwidth versus.
I've made plenty of money on options, so I don't know what you're talking about. Just because I don't trade them, because I like actually winning.
In the JEDEC spec, right? And
you know, I like actually winning, so there's a reason why I don't trade them anymore. I know, it's hard to understand for someone who's addicted to trading.
Higher performance HBM4 SKU maybe pushed out customer calls or
someone who has to trade every day. A bunch of addicts in my chat.
Even with the higher speeds, is your power consumption
bunch of little addicts. We gotta trade. We gotta trade. We didn't make any money, but we gotta trade again.
Very proud of our team's execution. Proud of our team's design of our DRAM die and the advanced CMOS technology that is used in that DRAM die, as well as our base.
Pokemon's a better investment than anything you've ever invested in your life. So, if you talk shit on Pokemon, it just shows it just shows how stupid you are. Plain and simple. Pokemon's an actual legitimate investment. So if you're gonna talk shit on Pokemon, you're talking shit on yourself.
All of this actually has enabled us to achieve, customers increasingly higher requirements.
What, you bought 1 share of NVIDIA and 1 share of Palantir, and you think you're smart? Congrats. Congrats, bro.
And speeds
didn't know anyone asked.
More than 11 gigabits per second as well. And this has really positioned as well, getting ready for production ramp of our HBM4 product with these kind of specs. And as I said, with these kind of specs will be at the forefront of HBM shipment ramp, keeping it in line.
You sold Palantir at $10 and NVIDIA at $20?
Thank you.
Like literally, why are you like trying to convince me that you're a good trader?
I think I said for that.
I don't know. It's kind of weird. It's kind of weird, bro.
I hope that came across clearly.
Kind of weird.
2.8 terabyte.
You're kind of weird.
Speed 11 gigabit per second.
Why are you so butthurt? Just because you got wrecked on your option trade today?
Thank you. Our next question comes from the line.
Why are you so butthurt?
Krish Sankar of TD Cowen. Please go ahead, Krish.
Yeah, hi, thanks for taking my question. I have two of them. Sanjay, you mentioned about getting sold out in HBM, hopefully in the next few months. Is there a way to quantify the supply opportunity in calendar 26, assuming you're fully sold out? And also, if the HBM demand is better than expected, can you increase supply in calendar 26?
I made 500 today. Good job.
Sold out in the next few months.
How much did you lose yesterday?
Yeah, we are not breaking down the supply volumes, etc. But yes, HBM3E
long-term made 3.8K. Wow.
With the vast majority of our HBM3E.
Wow, 3K? You're so rich, bro. I need to learn from you. How do I get as good at trading as you? How do I get as good at trading as you, bro? You made 3K? Woo! God damn. Pro trader right there.
And their own deployment of that in their next generation platforms. We expect to be concluding our agreements on HBM4 supply, as well as all of 2026 HBM supply here in 2026. In the next few months.
Bro, I made 30 grand last week.
Very pleased with our industry-leading HBM4 product.
I literally made 30 grand last week. So if you think you're special or cool, you're not. I'm sorry, you're not.
With respect to your question, we will of course manage
shit.
Now that we have reached our HBM
Crazy.
share in CQ3 to be in line with our industry DRAM share, we will manage, and non-HBM being healthy margins as well.
Yeah, I agree with you, CS, but there's a difference between coming in a random YouTube chat and actually acting like you're a pro trader and acting like you make this money when you don't.
As you can well understand, we have
who cares?
Of course, flexibility to opportunistically manage.
Listen to the fucking call and shut up.
HBM because
just because you're butthurt that I said options are trash doesn't mean anything.
Some of the rest of our products as well. So that gives us fungibility at the front end in terms of supply management and assembly and test.
Sorry. I'm sorry to anyone who's actually listening to the call. It's my bad. It's my bad.
Over the course of last several
my bad.
We are well positioned with capacity in assembly and test as well. So our investments and our team's strong execution in ramping up capacity and giving us the total confidence gives us now the flexibility to manage the mix of the full portfolio between HBM and non-HBM, keeping ROI in mind, and of course staying disciplined here with our investments as well.
Here, try typing now.
Sanjay, another quick question on HBM4. It's nice to see the 11 gigabits per second pin speed. You also said that you have the offering of both your in-house base die, also the customized TSM logic die. Is there a way to figure out what do you expect that mix to be? Do you expect more customers to go with the in-house die or the TSM die? And how easy is it for you from the Micron standpoint of switching between the two based on customer demand?
So HBM4 is a product that is with our internal base die, and HBM4E is where we said in our remarks that we will be offering standard products as well as customized products. And HBM4E is where we are partnering with TSMC. HBM4E is not in the industry. It's not a 2026 product. That will be 2027 kind of product, and we'll share more details with you. And we will have both standard and customized products in HBM4E. HBM4 using our own base die in the industry. HBM4 is what will be the product that will be ramping in production. And as you mentioned, that the value proposition of HBM continues to increase, and with HBM4E, the value proposition increases even further, and we would certainly expect, the customization to provide high gross margins.
How much did you lose last month?
In my prepared remarks.
Or the month before that? You might be profitable this month, but you're not profitable trader.
I would like to point out that our HBM uses our own.
Because anyone who's a profitable trader wouldn't sit in a YouTube chat and flex like they are.
Gives us unique advantages, and of course has been a key contributor along with our DRAM design and DRAM architecture, as well as the CMOS that is embedded inside the DRAM. All of that gives us a unique advantage in terms of industry-leading performance.
You aren't defending anything, bro.
Thank you. And as that is all the time we have for Q&A today, that does conclude the Q&A portion of this call and today's conference call. Thank you for participating. You may now disconnect.
There you go. There you go. So how much money did you lose? You say you're up 64,000 this month. How much have you lost? How much have you lost? Everyone only talks about how much they win. Nobody ever talks about how much they lost. It's kind of crazy, huh? Everyone only talks about how much they win, but trading's a 50-50 game, so I know you lose. If you've made $64,000 winning, I know you've lost a fuck ton of money too, so how much have you lost? Yeah, you won't have that conversation, will you? You won't have that conversation, will you? Gamblers are the same. They tell you about the winning horses they backed. Yep. Exactly. And shout out to you, Survive and Thrive. You were hella active, bro. You were hella active throughout that. I appreciate you, bro. And thanks to anyone here who actually was chill. You know, the weird little option addicts who have to like defend option trading for something. You guys are fucking weird, bro. You guys are weird, but shout out to the people who are actually chill here. Appreciate you. I was up 84,000 for the month, so I lost a decent amount, but profit's profit. Over the year, I'm way up, easily positive. Okay, if you lost $20,000 in less than a month, you're okay, guy. I don't know why you guys sit and like act like I had a horrible experience option trading. Like, I'm just a profitable trader. I like actually making money. I don't act like I'm cool because I made money one time. Like, I don't know. I don't know why you guys think like it's weird how you guys point the finger at me when I know the reality of this game. It's kind of interesting. It's kind of interesting how you're trying to point the finger at me, but you know I'm correct and you know you're full of shit. So it's just it's kind of funny. It's kind of funny. He told me they're all losers. Any winners in the shop are banned. You can't win long-term gambling. You can get lucky and walk away. Exactly. But nah, take it from random kids in a YouTube chat, bro. Like take it from the random kids in my YouTube chat. Gambling's profitable. Don't you worry. Crazy. Crazy. That stream was popping, though. That was a poppin' stream. This is literally why I don't talk about trading, though. Like, people are so fucking sensitive. People are so sensitive, bro. Like, why do you fucking defend option trading? The only people who would defend option trading are legitimate gambling addicts. Like, if you're an actual legitimate profitable option trader, you wouldn't be in a fucking random YouTube chat trying to defend it. Like, you guys who are trying to defend options are fucking addicts. Whether you want to admit it or not. Do I do chart astrology because that chart looks nice? Yeah, but it broke out forever ago. It's pretty tough to do technical analysis when it's already up massively. There's really nothing to base it off of. Like, there's no resistance for now as far as a trend. Like, the only thing you'd really be able to, or we gotta go to extended trading hours. Go to like a 1 hour or something. Like, the only thing you'd really be able to track is probably this line. Like, that's the only really relevant line, I would say. Maybe you could do like a resistance here. But there's really not much technical analysis to do on the resistance side. You're kind of just following this support. And how long that holds, who knows? But I don't know. I don't put much weight on the chart. I just, I put all my money in GameStop, so the chart's pretty irrelevant. I think if you trust in your analysis on the company, the chart doesn't even matter. This isn't my expertise, so that's a nice setup then. I mean, it's bullish, but how long is it going to keep bouncing off of this support line, Like, it's already bounced off this support line 1, 2, 3, 4 times within a, 2-week period. How long is it going to continue to hold that trend? That's very debatable. But like I said, I don't put really any weight on charts. I'm a value investor, bro, so my investment decisions are based on analysis of the business and fundamentals. Like, I don't care about what this line on a chart is, like, I don't care about this. Like, this is irrelevant. Like, I trust in my analysis for my investments. I don't need to sit and act like I'm a professional trader, trading off of a line and shit. Like, it's all about analysis for me. I don't really care about this. Like, if I was day trading, I would do more of this stuff, but like I said, I put all my money in GameStop because I believe in the analysis and I think it's a good long-term play. And I don't trade while I'm investing because, I think trading's a losing game. So why would I waste my time trading when there's what I consider a very profitable investment? Like, it doesn't seem worth my time to sit here and day trade all day when, I could probably make money day trading. Like, I could probably do it, but there's no guarantee in trading. There's no guarantee for profit. There's no guarantee for loss either. So it's like, and same with investing, there's no guarantee that you'll make money investing. So why would I play 2 losing games at once? In my mind, it seems to make a lot more sense just to put all my money in what I actually believe in instead of spending my time doing something that may or may not even be profitable. Like, sure, there's a bunch of geniuses in my chat who will make you think that trading's profitable, but I would like them to show their entire trading career because I guarantee they're not profitable. Guarantee it. So, chart stuff doesn't really matter, in my opinion. I really don't put any weight on it. Like, you can trade off of it, you can make money doing it. It's just most people don't. And, making money isn't guaranteed in trading. At least, from my experience, from, kids on the internet, you would think it is, but the reality is that it's not guaranteed. Do you do earnings call live streams often? This is actually the first one I've done in a while, and it was pretty successful, so we'll probably do more, but I live stream every day when the market's open. So I'm always here. Usually we're live streaming about GameStop, but there's really nothing going on over there. So I've been, streaming other things, and it's been doing okay. So I'm sure we'll do more streams like this, potentially in the future. Yeah, I mean, it's good though, you know, it's time to accumulate. It's beautiful, actually. I like that it's not moving. Just gives you more time to buy more, potentially, you know, if that's the goal. I would like it for it to sell off, actually, personally. It's gone up quite a bit. I don't know if it's going to. At this point, it seems extremely bullish. You know, I would love for it to sell off a little bit, but I just don't see it happening. I think a lot of people missed out on this little rally. And then anytime you get a sell-off, you know, people are there to buy the dip. But we'll see. We'll see. See, that's what I like. That's how I look at the market. I try to put myself in the shoes of other traders. Like, I don't really try to base my opinions off of, you know, lines and technical indicators and patterns and stuff like that. Like, I just try to see where people are, I guess, if that makes sense. Hey, much love, Ruben. Appreciate you, bro. Have a good one. Rely on fundamentals and consider Gamestop the top of fundamental stories out there, not AI. Gamestop, Mensa quality analysis. I mean, we'll see. We'll see what the future looks like. I don't know if GameStop's going to work out, but there's no other stocks in this market that aren't extremely overvalued, and like, you know, there's a lot of stocks in the market that are going to do well, but GameStop, from my opinion, is one of the only ones that is fairly valued, and the market's somewhat ignoring it, from my perspective. You know, there's 100 other stocks that are going to do good. It's just what's going to do the best in the next 5, 10, 20 years. That's what I'm interested in. That's what I'm interested in. I don't really care about, like, day trading and stuff like that, even though that's what I do. You know, I'm a day trader. I think I'm going to make exponentially more in the decades to come by just investing in something I believe in. I started with GME, never sold, but it's what got me into the market. Interesting. That's very interesting, Brandon. I would have never expected that. That's crazy. That's crazy. But yeah, who knows? I mean, I don't know the future. Nope, nobody does. That's why you know, I don't know. We'll see. We'll see what happens. We'll see what happens. I think it's better than trading, though. Try the ones with upward trending earnings and low PEs, like the company whose earnings you just covered. I don't care about those companies. If I cared about that, I would invest in it. I care about see, this is the thing, is you base your investment decision off what you see right now. My investment in GameStop is based on the potential future. Hey, later, Brandon. Appreciate you, bro. Have a good one. Hopefully we'll see you in another stream. Yeah, GameStop has upward trending earnings, and I don't know what GameStop's PE is because I don't care. Doesn't matter. I believed and I continue to believe that GameStop has the potential to reinvent itself, the ultimate destination for gamers within the thriving 200 billion gaming industry. I mean, GameStop should become more than that, though. That's old. You know, that's old analysis. I agree with the old analysis, but it should potentially become more than that. We'll see. We'll see. That was a weird stream, though. That was a weird stream. This is why I don't talk about trading, though, normally. Because, man, you just can't have an opinion on trading. You get attacked for saying options are trash when they're literally trash. Like, you just get attacked, bro, by a bunch of people who, like, got lucky a couple times and think they're smart. Like, it's wild. It's wild. There's literally no profitable option trade. Like, there is profitable option traders. Like, that's a thing, but you think they're in a random YouTube chat trying to, like defend options? Probably not. I don't think so. I don't think they are. I think the profitable option traders are on a beach somewhere, you know, sipping Mai Tais. I don't think they're in a YouTube chat trying to convince people that options are profitable. Just saying. Just saying. But I'm out of here. Appreciate everyone. All the OGs, of course. Thank you guys for always supporting the stream. Anyone who's new here, thanks for, you know, giving the stream another chance. Or if you're new today and you only came here today, hopefully we see you again. If not, either way, good luck on your little Micron trade. Hopefully it works out. And much love to all the people who are here every day, no matter what. I appreciate you guys. And I'll see you guys tomorrow. God bless ya. Peace!